Hello. Sorry about that. Mic wasn't working. It's working now. I'm back. How's everybody doing? Sorry, I'm fuming this morning as well. I'm late. I'm fuming. The markets went mental yesterday. I've got a complete, I'm not going to say idiot, a person with a misunderstanding of everything I'm trying to deal with. It's been one of those mornings. Anyway, how are you all doing? Morning, Michael. Morning, Johannes. Morning, Big Papa. Morning, Stevie. Morning, Montevilla. Morning, David. Morning, Joachim. Morning, Garmond. Morning, Anna. And hello, Johannes again. DAX is going long at open. Could be, yes. Be interesting to see what the DAX does this morning. Yesterday, I'm not going to concentrate too much on the DAX this morning. We need to unpick yesterday, basically. We had a big move. We got lots of news overnight. There's so much gone on over the last sort of 12 hours. Need to really spend some time picking it apart. But this morning, unfortunately, I've had to be dealing with somebody all morning, and I haven't had a chance to even look at anything yet. I'm not being funny, but I have to get this off my chest. A bloke left a negative review about the market reverse alert indicator, saying, I took a trade with it and then the indicator disappeared. It's a con. It's a fraud. Ignore the usual stuff, right? So I went and had a look at him and replied to him and said, you don't think you really understand what this is doing? And went and looked him up. I've had conversations with him in the NQL5 marketplace about it, right? And I sent him a link to the Telegram group, right? And his first response was, you don't provide any information or education about this. How was I supposed to know, type thing? And I'm like, hang on a minute. I sent you a link to the Telegram group. I'm in the Telegram group. I've never seen any information about training. I'm like, every day, without fail, there's a post, which is as long as your arm, that goes in there about everything to do with the indicators, education, everything. How have you missed that? And the free live rooms twice a day, sorry, but if you have to leave a negative review because you haven't understood something with about 20 hours of free education pumped at you twice a day in a group, I really don't think it's trading's for you, do you? Anyway, if you're in here and you'd like any information about the market reverse alerts indicator live, because you can't watch a video which I've posted to you 20 times since you've been here, let me know. Anyway, that's off my chest now. Morning, John. Morning, Freeman. This is what I have to deal with on a daily basis. Honestly, some people are just not set up for trading. It's just not going to work. Yeah. I posted a link to the website to him. He's just emailed me back or messaged me back saying, which exactly link do I need to look at? You've bought the market reverse alerts indicator. Which link do you need to go to? Oh, sorry, but a 5-year-old child that can't read can work that out. So it just gets my goat when people want to be spoon-fed links on websites to information about things they bought. It's just like, I'm not very good at customer service, as you know. Anyway, so the market went mental yesterday. Yesterday afternoon, we had moves all over the place. The Swiss franc powered up massively. For some unknown reason, we got a massive dump into the Swissy. I don't know if it's not really an unknown reason. We had a lot of news yesterday, but you see, look at this, the end's gone mental as well, but obviously we'll look at that in a minute. But I'm unsure as to why the Swissy got the lion's share of the movement yesterday. So let's scroll back and look at where it all kicked off, which was back here. Morning, David. I've said hello already. Morning, it's time. Morning, Big Papa. I think I've said hello. Morning, Sport Lotto 82. Why let this guy bother you? It's just, it annoys me, right? The thing that annoys me is, if people don't like the indicator, I have no problem. It's not for everybody. Anything, trading is a very specific thing. I bend over backwards to do 2 live rooms for 5 or 6 hours a day. I record God knows how many hours of videos. I post more information than I've ever seen anybody in the entire industry post about every product, including 2.5-hour videos on one indicator to explain it. People just can't be asked. That's what annoys me. It's not this person or the fact they can't find something. It's the fact they can't be asked. I want to become a brain surgeon. It's a 6-year course. Oh, can you just show me how to open the brain? It's like, oh, God's sake, no. That's what annoys me. Anyway, we'll stop talking about it. I'll fume later. Maybe next time you put a note stating not suitable for total newbies. This guy, right, has been on MQL5 for 4 years. He's even published signals, yeah? Can't be funny, but anyway. Was Swiss on the back of the CSFB story relating to filings to the SEC? Yeah, I don't know what's happened. Something's happened under the hood somewhere. It's not that he's posting negative review based on his own... Yeah, I know. Anyway, don't talk about it. I get them every now and again. I don't care about negative reviews, really. That's not what gets my goat. It's the fact that it can't be asked. I've never seen any posts to education. Go in the Telegram group. I've been in the Telegram group for months. Are you blind? Anyway, so basically we got lots of news came in later yesterday. So we had the Bank of Canada, Governor Rogers, sounds very official. The near US and European outlooks for growth and inflation are higher than we expected. This could point to some further inflationary pressure in Canada. So, i.e., we're not quite getting on top of inflation as fast as we wanted to. Market's just opened, by the way. Oh, Jesus, wrong one. So there's the pre-market 15. Oh, no, I've got the set file running. Oh, that's all right. There's a really, really nice, easy gap fill today. What's that alert? Euro pound alert has just gone off. That's one I set yesterday. So quickly look at that before we do the news. Right, so this is that double bottom on the euro pound that I was looking at yesterday for a potential buy. So that's just triggered. That was that previous day's low, but this was really an alert for yesterday. What I was looking for was for this to get down here yesterday and then go for a potential, because this would have been a really nice ADR. That was going to be 125 ADR and RSI extension. So even so, this is still a pretty good long. Look at the reaction. Look at the limit orders triggering. Yeah, this is what I keep going on about all the time when we talk about limit orders. This is why you get these hammers and these shooting stars, yeah? This is institutions placing buy stops, sell stops, etc., limit orders and at levels ready to say, right, just get in. Yeah, we bought it here. If it comes back here, buy it again. That's why you get that reaction. It's just the fact that there are lots and lots of orders triggering at the same time. And as we're selling into it, the buyers are just completely overwhelming. Yeah, doesn't mean necessarily it's going to bounce, but if the sellers have had enough, or that was a profit take move and they've finished it, you will just find it happening. It's a self-fulfilling prophecy. This is why support and resistance works. So it's potentially a good buy opportunity there on the euro pound. So inflationary pressure higher, which means that there's potential for interest rate rises. Yep. So the Bank of Canada coming out saying, yeah, it's not going as well as we thought it was. And this is the day before the interest rates. Yeah, remember? If evidence accumulates suggesting inflation may not decline in line with our forecast, we're prepared to do more. So the forecast today is for, sorry, this is unemployment, isn't it? Is it next week? When's the CAD? Euro. When's the CAD interest rate coming up? I thought it was soon. Maybe it's not. It's the CPI coming up. Sorry. Yeah, so basically they're saying obviously the interest rates are likely to go up more. So when we look at where we are with the CAD, so we're at 4.5, and we didn't have a change last time. What she's saying is basically, yes, it was going well, but probably not as well now. This means we need more pressure on there. As the US is also putting their rates up, and they're talking about going up to a 5.25 to 5.5, they're going to fall in line. So this is all bullish CAD. We've got the unemployment figures coming out today. If these unemployment figures today come out as expected or better than expected, I think we're going to get a really, really big Canadian dollar move this afternoon. So short on the DAX. Short on the DAX. On the pre-market. This is your 5-minute opening range. So yeah, it could be good moves on the Canadian dollar this afternoon. So that was the CAD news. And then we had Biden talking. Remarks on the budget, and then after that we had the stock market absolutely fall out of bed, basically. So everything fell fast, hard, all at the same time. So if we look at the NASDAQ yesterday, let's go to 15 so we can see it. It just all collapsed. Yeah. After lunch, the whole thing just came down like a house of cards. We had it's 237. Yeah, we had a 378 move. Yeah, it's over one and a half ADR, just like boom, dropped fast and hard. So when you look at it on a daily basis, remember I was saying, I don't think this bear market is over yet. And every time we seem to get some signs of bullishness, we get this huge retracement, these huge, like walking up the stairs for 3 days, boom, collapse. The bear moves are still a lot stronger than the bull moves. We had a nice couple of days, and then we were like, oh, no, not quite, bang. And then we had an indecision day and another bang. You know, if we get a strong US dollar, if the unemployment figures come out as expected or come out as better than expected today, this is coming down fast and hard. And yesterday, I think, may have been a precursor to it. But there was also a lot of other news released at the same time. We also had the yen overnight. The PPI figures for the yen came out, so slightly worse than expected on the year on years. The interest rates came out as expected for the yen. The comments from what I've seen from Japan overnight is pretty much as expected. So there's no real shocks in there, but we did have a lot of weakness on the yen. And I think that yen weakness was mainly based off of the PPI figures. So there was no good news came out of the statement, and we had negative PPI. So this was Kuroda's final meeting led by those things. Yeah. So here we go. Some more Kuroda coming in early morning. So we had that. Then this morning as well, we had the GDP figures for the pound. So if you look at the month on month, GDP went up. So again, unexpected pound. So there's so much gone on in the last sort of 12 hours since, you know, we had that sleepy session. New York was like, yeah, not really going anywhere. And then literally after it went off air, the whole thing exploded yesterday. We had ADRs all over the place. We've got weekly ranges now, sitting up at the 175 levels. You know, it all went absolutely mental. So we need to really unpick all of this and see where everything is likely to be going now. And obviously 1:30 this afternoon, we've got this lot. So there's a very strong probability everything that happened yesterday is just going to get completely unpicked. So mental yesterday. Still, the year on year is still forecast as a 0, which is just escaping recession for the pound. So whilst we're still a long way to go, the UK economy has proven to be more resilient than many had anticipated. Yeah, so bullish pound basically off of those GDP figures. But the pound, it is reacting. I was watching the pound before I came on. It is reacting positively, but not, you know, I wouldn't call it, woohoo, we're off. I would call it, yeah, it's okay. Yeah, we haven't got that, have we? We haven't had the mental move that we could possibly have got out of the pound. So I still think it's bullish, though. It's a buy today, I reckon, the pound. Want to be going up. Sentiment on the pound today. Yeah, perfect. Perfect. They're all short. Everybody's short in the pound. Yeah. Oh, that's not euro pound. Sorry. So pound CAD, they're all short in it. Pound odd, they're all short in it. Pound yen, they're short in it. Pound New Zealand, they're short in it. Pound Swiss is the only one they're long on. Look what happened to the Swiss. Pound yen, pound US dollar, they're shorting it. Yeah. So it's a long from a retail perspective as well. Yeah. So, however, look at the pound US dollar. We're getting up to the completion of this propulsion gap. So we'll see if we get some selling stepping in here today. But anyway, so that's the overnight news. Obviously, today is a big one, 1:30. So I'm coming on at 1:20 this afternoon, not 2:20. We'll come on and we'll watch the unemployment. We'll watch the all the figures coming out, and we'll see what further impact that has. So the Bank of Japan press conference obviously caused a massive spike. So all the yen pairs this morning, craziness. Yeah. Big move to the upside. They undid half of it within 10 minutes. Looking through all of the yen pairs, we had a 50% retracement. Yeah. And it's pushed up. ADR hits on some of these: Aussie yen, Swiss yen, and pound yen. Swiss yen obviously is the biggest one because of the Swiss move yesterday. We got the euro pushed up. That one's come back already. Yeah. Swiss is almost there. And Aussie, I think, was weaker. So, yeah, that one is still got a long way potentially to come back down again. So this, I think, is probably a knee-jerk. So this is negative PMI. Yeah, so this is being caused by the negative PMI figures. The statement wasn't particularly impactful and didn't give any real forward guidance, bullish or bearish, that is different to what we've seen over the last 3 to 4 months. So I don't think there's any real difference in stance on the yen. So I would expect this to get undone. And for moves that we've seen to continue, strengthen the yen. Yeah, just because they got negative PMI, to me, it doesn't mean anything more than, yeah, we're going to intervene more. But I don't know. So ADR reversals on all of these were lovely this morning. Aussie dollar yen obviously has just started to come off. You've had the 5-minute reversal alert, which will redraw if structure changes, if you're in here, the person on MQL5. Swiss yen, we've had the reversal. That's starting to play out, and pound yen as well. That's coming down because we've got a strong pound. That one was probably actually going to be the one that will move the most at the moment because we've got a strong pound, or I'm expecting a strong pound. Although it seems to be struggling. Yeah, struggling. So we'll see on those. Right, let me just catch up on the chat. Was Swiss on the back of the CSFB story? Yeah, not sure exactly what that Swissy was, but it could be up and down. Snowed in, morning trades, morning Seymour, you snowed in. Blimey. Yeah, we've got loads of snow in the UK. I've got none because I live by the coast and we just don't get it. The salt solves it all before it gets anywhere. But yeah, that would be nice. Clearly it's a competitor now. It's not a competitor, it's just somebody that's unable to lift their hand to operate a mouse. Morning. Nothing to do with Credit Suisse not posting results. Yeah, I think that is probably it. So these Swissies, looking at these Swissies, the thing about it is it was if you look at it, it wasn't oh my God, it was a very strong sustained sell-off. It wasn't like a news event. We didn't get a sudden collapse, as in this wasn't a knee-jerk reaction. But when you look at it, yeah, would you not think that the Swiss National Bank not filing properly with the SEC was positive or negative Swiss, right? You would think everyone would be like, oh my God, that's not good. It's a negative thing, isn't it? The Swiss franc powered up. So I don't think this was to do with that. I think this was potential safe haven money arriving before the unemployment figures and everything today, and ahead of the Kuroda speech, because obviously there was potential for them to signal some kind of monetary policy shift for Japan. We were expecting that Japanese interest rate to change from negative 0.1 to a negative, to a zero. And then potentially up into positives. So this could well have just been the market selling off ahead of all the news, and putting all the money basically into the Swiss, which is safe. So it's the old safe haven move. But yeah, I don't know. But that was a big one, wasn't it? Look at the size of it. Speed. But unfortunately, at the time that hit, a lot of these Swiss francs were extended on RSI. So you will have gone into, you know, a bit more drawdown on these, and we're certainly collapsing a little bit more this morning, aren't we? So DD on the Swissies. What's the DAX doing? So stopped out, break even on the pre-market. So there's a pre-market push. Didn't get 1.5 hour. Oh, no, I might have done. Yeah, no, got 1.5 hour. Where are we? 40. Might have done, unlikely, more likely a break-even stop out on that one. But it's going south. So we're leaving this gap in place for later. That would indicate negative US if that was to happen. We'll have a look at the ADRs and the 2.5 million RSIs we've got today. Lots of stuff to look at today. Let me just get caught up on the chat first. Today I'm squeezing lemons. You mean you're in a squeeze? Yeah, there'll be a few squeezes out there today. Morning, Brian. Miami Dave, short on footsie. Good. You will have been doing profit on that, I would imagine. Morning, Shroud. Morning, DC. I'm stuck negative in CAD Swiss, breaking support, and we have some clean air. And on Euro odd. Yeah. So, sorry, I'm just monitor something on my other monitor. Yeah, so CAD Swiss. So obviously this was one of the most dramatic, because what we had, what did this do yesterday? 809. So it's a 200, roughly. 200 ADR-ish, 175. So obviously what we had yesterday was all that CAD news. Yeah, and what that did was with the CAD pairs, we had a drop. At the same time, and this is why it's important to understand exposure and understand currency correlations, yeah? At the same time as having the CAD drop, we had the Swiss franc power up. So what you get is a double strength move in one direction. So this is now super, super extended. So on the hourly, we got down to 7. Sevens just don't happen, do they? Look. You just don't get down to these levels. The only time you're ever going to achieve something like this is when you've got 2 news events hitting at the same time in opposite directions. Exactly the possible potential that we have this afternoon, yeah? So if we have CAD unemployment come out as a positive and we have US dollar unemployment come out as a negative, you're going to get a super huge move on the US dollar CAD, aren't you? If they both come out in the same direction, they're both going to fight each other for positiveness, and you're just going to get a sideways movement. One of them will slightly win, but that's what we had yesterday with the CAD Swiss. So it's just one of those unfortunate events where everything just misaligns exactly at the same time. So, however, what that does mean is that you have got markets very overexposed in one direction, and they will be very jittery when they see that P&L dropping. So we're either going to get a flag break on it, or what is more likely to happen today is this. I wouldn't say we're probably going to get too much movement on anything CAD related today, because what they're going to want to wait for is the unemployment figures. The danger here is that they wait for the unemployment figures to come out on the CAD, and those unemployment figures come out as negative on the CAD, And obviously, anybody that is in a short position here is going to add more shorts. You're in massive profit. You've got negative news. It's not going to go up. So an as expected or positive CAD release, an as expected or positive CAD release will completely probably V-shaped recovery, this whole thing, 200 ADR move. If we get US dollar positive as well, that will double bolster the CAD and we'll get an even stronger move. But it's all out of our hands, isn't it, at the end of the day? But you know that they are extended. So there may not be enough left for them to move it anymore. I don't know. We'll see this afternoon. But you need to scale out of some if you're in too much doo-doo. Get rid of some of the pressure. But obviously what I would tend to do is wait today and see if you get an Asian break. So at the moment, if we don't break Asia, there's no point in doing anything. Yeah. So that's Asia. Yeah. London. If London stays within Asia, you're just going to sit where you are. If for any reason they run for the hills because they know something ahead of time, that's fine. But dependent on how squeezed you are on these, it's time for aggressive drawdown control. But you want to, and these are the times when aggressive drawdown control will just get you out in minutes. Because if we get a positive move on the CAD and you've taken an aggressive buy stop there, when that aggressive drawdown control triggers, you'll be out literally this afternoon. But it's impossible to tell. Looking at the 4 hour, yeah, look at where we are on the 4 hour. I mean, let's draw a line where we are on the 4 hour. Yeah, I hate this word. I'm going to use it, but I hate it because this is the word they used throughout the pandemic every single day. This is an unprecedented event, i.e. we haven't got a clue. We haven't been at this level before. So if you go back in time, yeah. Oh, did I just see one? We got close. Yeah, we got close here. There, we had one. So that was the extension there. Yeah. So look what it did after that. We had a bit of a pullback, aggressive drawdown control, pullback potentially, but look, we got that. But after that was that. So it's a case of, that's the only time in history on this particular instrument we've got to have a look at an opportunity that happened like this. Yeah. We've got two here, but this was COVID. Yeah, this is COVID. Yeah, this is not a COVID event, obviously, but this is normal in normal times. Yeah, down to there. Got a couple close there, big pullback. That one there, huge pullback, V-shaped recovery. Yeah, this is what I'm looking for out of this move, V-shaped recovery. It's just, you know, you can't time when these things are going to happen. So V-shaped recovery, at least a pullback into there, this massive propulsion gap on the 4 hour, or back up to there. Yeah. Hopefully the news will be the catalyst this afternoon that starts it. Yeah, the profit take move, but we have to wait and see. So if you're in 3% on both pairs, at the same time, obviously, so you're in 6%. So if that is your level, then this is where you start to do your aggressive drawdown control. So for aggressive drawdown control on this, just done a video on it, but I'll do it, again. What I would do personally on this is I would be looking at the 15-minute time frame, not the 5. And all I would do today is I would try an aggressive drawdown control position above the Asian midline with a stop below the low. Or if you want to be a little bit more conservative, take the M15 reverse alert as your aggressive drawdown control position, but you're going to have a much bigger, wider stop on that. And whatever your lot size is on it, go in with somewhere in the region, dependent on your comfort level, of 30 to 50%. If you want to be super aggressive, and this isn't something I really recommend, but I've done it before in the past, and it's worked. Take 2 positions and do an add. So take 100% of your current lot size, put 50% of it on there. If it starts to work, put 50% of it on there, but bring the risk on this one when you go and trigger that up to, you know, not a lot. Yeah, because if you think about what the likelihood is of happening after that reversal, it's potentially that. So what you don't want to do if you're taking an aggressive there is bring your stop up to break even, because you're likely going to get a 50% retracement on that move, which is going to stop you out on your aggressive position just before you get the run. So reduce the risk, but don't go stupid on it. Yeah, don't go stupid tight with it. It'll either work or it won't. Nothing you can do. This isn't really a squeeze. This is just one of those, you know, a squeeze is over a longer period of time usually. Not, this is just like I say, it's just one of those things where you've got 2 news events, positive and negative, hitting at the same time, and you can't do anything about it. The question is, whatever happens, is there going to be more money flowing into the Swiss franc today? That's the question. If they are going to continue to pile into the Swissy, I would say there is a chance of that because of the Asian move. Then we will see that happening in London. Yeah, New York has piled into the Swissy, Asia's piled into the Swissy, London didn't yesterday. We're in the London session. So there is a chance of that happening. Yeah, don't know. We'll see. But nothing you can do. You just have to scale out. And if you're doing drawdown control along the way with the EA, obviously it will scale out for you. I think mine's in ridiculous drawdown on that. Pound US dollar. Morning, Marion. Johan is short on pound CAD. Yeah, these pounds, this might be a fake move on the pound, you know. I'm not convinced about the strength on the pound, to be honest. Oh, look, the pound US dollar is coming down heavy and fast. Yeah, I'm not too convinced about this pound. Look, we've had positive GDP figures and it's not really looking convincing, is it? I'd be much more inclined to see some strength on the CAD and strength on the US dollar this afternoon. I think the market is preempting that as well by the looks of things at the moment. So, morning, Henry. First day in here, is it? Probably best not to come in and attack everybody. Johannes, I'm in short on pound CAD. Cool. Henry, can you just email me your crystal ball if you could when you get? It's not the right day to come in and start saying things like that. I'm not in the best mood. Idiot. Mariana, I took advice and I'm in a sell. Okay. Pound US dollar. So yeah, so basically we're back in the propulsion gap. Yeah. So obviously the pound has had positive GDP figures, which I don't think are actually as positive as it looks. We know the outlook on the pound. If you're looking at fundamentals, you know it's Henry, I know how to switch chart. Let me just mute you because you're annoying me. Switch to the daily. Okay. So yeah, so we're in a massive bull run on a pullback short. And you're going long. That's fine. You do that. You do you. I'll do me. Go and look at the fundamentals. Go and look at the fundamentals on the pound US dollar. Go and look at the fundamentals and what the futures market is positioned on it. Anyway, that's fine. You do you. I'm not gonna bite this morning. I'm not gonna bite. Obviously running a completely different strategy, which is fine. But if you're in here, you're not profitable. Otherwise, you'd be on your own doing your trading, wouldn't you? Bye-bye. US dollar short. Oh, I don't want to do this today. I mean, it's just been one of those days this morning. Pound US dollar shorts. So nicely extended on the RSI. H4, we're floating in the middle on H4 at the moment. Obviously, it's a massive bear trend at the moment. Whichever time frame you're looking at, it's bearish. The US dollar is massively strong. We've got strong fundamentals. We've got strong news. Pound is massively bearish. We've got bearish fundamentals. We've had one piece of bullish news this morning, which was only a monthly, not a quarterly or an annual. So it is bullish short term, but as you can see, obviously the bears are stepping in now. So I think with all of these pounds, we're pushing back up into propulsion. So the sellers are starting to probably add back in again where we are at the minute. But it depends on obviously this afternoon's news. The only thing that is going to decide the direction of this today is the news this afternoon. It's either going to go that way or that way, depending on whether the US dollar pumps or dumps. So all we can do really is look at the technicals. Technicals line up for a short. Bias lines up for a short. Trend lines up for a short. RSI on the hourly lines up for a short. M5, you've just had a reversal alert and it's dumping. So all looks good for a short. However, obviously, there's potential for a little bit more upward momentum on this one at the moment as well. So it's a difficult one. But, you know, you've got to go with the fundamentals and the technicals, and they all line up in the same direction. So US dollar CAD smashed my 10-ton weight. Yeah, it will do. It will have done last night. We'll have a look at all the RSIs and everything in a minute. But yes, nice strong pushes on that. Definitely a much stronger US dollar. We're going to get some more from propulsion gaps here, definitely. This one here, I suspect we will not get back to. It has been tested, but it wasn't, you know, it's straight after. It was literally bulls, never looked back from there. That one we had a little bit of a wobble on. We've got this one here, which we will come back down into here. And again, you know, it all depends on the news this afternoon, really. There's potential for an easy 200 ADR move this afternoon. But the market is exhausted, so it may not get anywhere. You never know. It's one of those could go either way scenarios, isn't it? Morning, Yemen. What do you think will happen today to NAS and US 30? So NAS and US 30 obviously are going to be driven by the US dollar move. So obviously there's a strong probability of a pullback. So we're running into this propulsion gap, which is where they're starting to buy. Obviously this is how the market moves. So we've got this propulsion gap formed by this collapse yesterday. If we get a strong US dollar this afternoon, then obviously the indices are going to come down. So if we get an as expected or lower than expected, or rather higher than expected unemployment rate, that was going to be negative US, we will push up into there. So at the moment, it depends on obviously what the news is going to be. But if we get negative US, or probably as expected, I would expect a rally. So I'll be looking for longs on it. But, you know, it doesn't matter what you think. You know, this is like when, you know, when people like Henry come in and say, pound CAD will go 198 pips more to the upside. Henry hasn't got a bloody clue, because Henry can't see what the future is. You know, it's one of those, you haven't got a clue which way it's going. It will go where it's going to go when the news comes out. And there isn't anybody on the planet that can forecast it. But we know that if the US dollar powers up, it drops. And if the US dollar drops, it pumps. That's all we know. But let's have a look at Henry's forecast. 198 pips to the upside. Okay. Bloody hell, that's a big move. So 225 ADR. So you're just playing a resistance bounce, basically, aren't you? I know you're not. So you're just playing a resistance bounce up there for some reason. It will go. It's going to come down today, Henry, but it will probably go up there at some point. You know, it's what you're saying is like, in the future, the weather will change. There's two things that happen in the market. It goes up, it goes down, and it moves through time. I can guarantee Henry's going to be right at some point in the future, but Henry doesn't know when. That's the thing, obviously, we cover in the bootcamp. Oh, Henry, you've been put on timeout. Sorry, that was an accident. So I can't concentrate with idiots in the room. Right, let's look at the ADRs. So Aussie dollar yen. So we got all these Aussie dollars massively extended, all played out so far. 5-minute reversal alert. Oh, sorry, not 5-minute reversal alert. But we've had we have had a 5-minute reversal alert. M pattern at the highs and drop. So that one's already gone. Swiss yen, same thing. Everything's playing out on these yens. So no real opportunities on those at the moment. Again, anything we get this afternoon, Brian, if you just spat on the screen again. Anything we get this afternoon, obviously ADR wise, be very careful. When we get these news events, if it's a fundamental shift, I don't need to say it because obviously we've seen it many times before. The unemployment figures will cause a very, very large move, and that large move quite often will not recover for a good couple of days. So don't try and mean revert the news. Obviously, sometimes we do get the news spike, but with unemployment is a leading indicator. So we need to make sure that we're paying attention to the direction the market moves on unemployment, because usually it's right. So there's no real opportunities on those. These weeklies, we're on Friday, so all of these can basically play out, can't they? It's a Friday, but everything you see here, US dollar CAD massively extended. Obviously, it's just going to be news based, whether it's going to go up or it's going to go down. So RSIs are your best opportunities if you want to get into something today, but I would try and obviously just manage the positions you've got on at the moment and look for new opportunities after the news when we know which direction it's going. If you take these trades now, there's a high probability, like for example, Aussie dollar Swiss. If you get into Aussie dollar Swiss now because you're not in it, there's a high probability the trade is just going to play out and fly. But it's just going to be based on the news event. Everything's going to move potentially this afternoon. Obviously, the US dollar and the CAD will be the main movers, but there's potential for everything to be moved because obviously to put money into the US dollar and the CAD, you need to pull it out of somewhere else, which means if they're pumping the US dollar, they'll be pulling it out of the pound to put it there. So you'll find everything will have some kind of movement usually this afternoon, and it's what they wait for to kickstart moves. So everything that's extended here that isn't related to the US dollar, like the Aussie dollar Swiss, they'll be sitting on it, waiting to know what they're going to do with their US dollar and their CAD positions. And then once they've done that, they'll be like, okay, right now we can do what we were going to do on the Aussie dollar and the Swiss, because they'll know what they need to manage their portfolio. So banks and institutions are running a portfolio of all currencies. How they position themselves on one currency has an impact on how they position themselves on the other. So when they say, okay, right, now we want to do this with the US dollar, that will change what they do with their Aussies and their Swisses, for example. So that's why everything moves on news. And everyone's like, well, why has the Aussie dollar gone mental? Because the US dollar news has come out. It's because now they know what they want to do with their Aussie portfolio because their US portfolio has now been affected in a different way. So when we're down here, extended, and we're ready to do a profit take move, this is when we tend to get them started, when we get these big news events. So we've got a nice hammer gone in there, and we've got an indecision candle at the moment. The reversal alert went in on the 15-minute this morning on Asia. So again, another reversal alert. If you're not in it already, obviously if you are in it, you've just taken another position and added. But that is massively extended on the 4-hour. It's massively extended on the hourly. Nice bullish engulfing there. So it is starting to come back. We're coming back up here and here at some point. But obviously with a Swiss franc steam train at the minute, we need to see whether or not that steam train keeps running or whether it's going to start to flag and reverse. So huge extension, really good opportunity to get in if you're not already in it. But most people will already be in this from here or somewhere around here. So when we broke this low, basically. But that's where we're going to head. That's where we're going to come back up to. Because I've got a crystal ball that tells me that. We may not come up to there, obviously. We got this propulsion gap, yeah. So worst case scenario, interim, best. Yeah, we don't know where it's going, obviously. It could collapse, but it will come up at some point, but you can't hold it that long, obviously. So it needs to be managed. But this is a good opportunity when we get down to, you know, if you wanted to, you could use the RSI as a gauge. You know, we're talking about doing aggressive drawdown control this morning. You can use the RSI as a gauge if you wanted to for getting into aggressive positions. So when we get down to the 30s, we enter. When we get down to the 20s, we know that it's very extended and more likely to ping back, the elastic band theory. You could enter at 20s. You could use the 10 for your aggressive. If we get down below 10 on the RSI, I'm going to start getting aggressive entries. So was it Henry was saying that earlier, wasn't it? Is it Henry? Michael, sorry. Henry, I've got Henry on my brain now. So yeah, you can use that as your trigger for aggressive positions, but we don't get down there very often. You know, on the 4 hour especially, we don't get down there very often. On the hourly, we do hit the 10. Yeah, so, you know, we hit the 10 back here. And look, you'd have taken aggressive drawdown control position in there, you got to move out of it. Still got that target though. So, but what you probably, you know, realistically, you'd have taken the M5 reverse alert in there. There's your stop. Realistically, you only got a 2-to-1 out of it. So probably would have got a break-even stop out on that one. May have taken the profit and done some aggressive drawdown control. But mind you, you would only have been in from there, wouldn't you? So I mean, you don't. This is the thing. When you got down here, it's too early to get an aggressive, isn't it? You only have a couple of positions on. You don't do aggressive drawdown control when you've got 2 or 3 positions. That's just the norm. Anyway, so Aussie dollar Swiss still massively extended, still opportunity for a pushback, and obviously we'd be looking for that as a target initially. So again, adjust your targets. Yeah, try to keep yourself within an ADR and look for the most obvious targets. Yeah, so this is the most likely target now, is that. Failing that, that would be the target we'd be going for, and obviously up there as our ultimate terminus. Morning Forex ADR signals. Oh. Not even going to comment on your name. Yeah. Lee, how was you able to change the 80-20 levels on your RSI to bold red line? I haven't. It's a secret. The banks know this. I can't release it. This is just a line, Brian. David. God, there's so many regulars in here now. I'll keep getting everyone confused. So this is just a line, look. Yeah? It's just a trend line. So draw a trend line. And people don't know this. This is actually something that people don't know. You can draw trend lines on indicators. That's it, literally all that is. I've just drawn a trend line. Oops, I've deleted a trend line. I've just drawn a horizontal line on the indicator. And you can adjust it in exactly the same way as you can on the chart. And give it a parameter of 80. That's all it is. Just clever. It's just clever, isn't it? Alt-H. What's that do? I'm not going to press it in case it's a scam and it shuts everything down. That was an old one, wasn't it? I can't remember what it was. It was ages ago. I was watching I think it was a gaming stream where someone was PC gaming and he got something went wrong in it. And some bloke in the chat said, "Oh, that's an easy fix, mate. Just press Alt F4 and that will sort it out." And obviously that shuts the program down. So he Alt F4'd and closed the application. It was like, you fell for it. So yeah, I'm not pressing Alt H. Oh, there's 77 watching and only 14 likes, by the way. Probably people don't like me this morning because I'm in a bad mood. But anyway, like the stream. Henry won't be liking the stream. He'll be thumbs downing it because he's a guru and he knows everything. Works on TradingView. All right, okay. Forex signals. Your dashboards are amazing. I know. They're very simple. But they're amazing. What trades are you in? Lots. I'm not going through all my trades in detail. We haven't got time. I've got to come back on at 120, so I'm trying to keep this one this morning as short as I possibly can. I'm in a pound US dollar long though at the moment. I'll have you know, but it's only a scalp. That's nothing to do with ADR. We've covered the ADRs this morning. Aussie dollar yen. So this one's starting to play out now. This is a 4-hour RSI extension. It's triggered overnight, so obviously you needed the market reversal alert CA to get into this one. There was our extension start here, which was basically a double bottom. So that would have been your first entry. You would have scaled in. You wouldn't have got another entry until there. There wouldn't have been a reversal alert until down there. So you would probably be out. But if you're not out, you're back in again. Yeah. So just waiting for some weakness in the yen. Nice strong yen at the moment. Really weak Aussie dollar. So nice extension on the 4 hours still. Opportunity for a long opportunity there. But, you know, back up into here, there's an obvious propulsion gap. If you look at the hourly for the propulsion gaps, this is the one that is untested so far. These are already tested. That one's not either. So we've got 200 ADR. And again, remember this afternoon, highly likely we're going to get that move off of the US dollar, which will impact the yen as well. Look at that propulsion gap. Boing. Sounds a bit rude. CAD Swiss. We know about CAD Swiss. We've looked at the CAD Swiss this morning. CAD Swiss is in parabolic freefall. Yeah, don't get below 10 very often on the H4. So John just said in the Telegram group, you should be in a bad mood more often. I'm hilarious today. Also, don't forget, I've got a lot of things going on. I've got a trapped nerve in my shoulder, right, which I've been in pain with for this is 6 weeks it's coming on to now. I've been in pain with my shoulder. I'm on all sorts of drugs, and I've been dealing with idiots all morning. And there's only so much you can take as a human being before you just go, for God's sake, leave me alone. I'm not like that this morning, not quite, but you know. And then you get someone come on like Henry, who didn't be able to predict the future, and it's just like, oh, just the last straw. Anyway, CAD Swiss, nice extension. Everybody's going to be in a squeeze on this after this move. Parabolic yesterday. Look what it left in its wake. A huge propulsion gap. So again, I'm not 100% on that. I think this is more safe haven money, and that will be removed dependent on the news this afternoon in all likelihood. So I don't, depending on obviously whether we get a positive CAD move, I think there's a good possibility of a strong move up on this afternoon. If we get positive unemployment, it's going to be awesome. This thing's going to fly. 200 ADR, no problem. As Forex ADR signals will contest too. The momentum is quite strong behind the pound. Yeah, at the moment the pound is pumping. It will do because obviously we've got news. So, but it'll only be temporary. This monthly figure, monthly GDP is really deceiving. Yeah, and this is why we tend to get really good strong moves. And that's why I said we probably expect some ADR hits on the pound today. I was quite surprised it pulled back so hard off of the news. Normally I'd expect. In fact, I know what it's done. You can see exactly what it's done. If you look at the pound US on the 5-minute, we pulled back into the propulsion gap. Yeah, this is the news. We pushed, pulled, pushed, everybody entered, put their stops there. They liquidated everybody, and now they're off. Yeah, it's absolute textbook stop run, isn't it? Yeah, propulsion gap, rebuy. So they're adding to longs, taking all the liquidity, adding to longs. Yeah, sell, profit take, bang. It's just typical bank move. We're going to break that high. But it's a monthly figure. So with monthly figures, these change regularly, yeah? So the quarterly GDP for the pound, I must have fundamentals open all the time. I keep telling myself that. So yeah, when you look at the fundamentals for the pound, the GDP is flat. We've had a slight quarterly increase, but the quarterly increase is not in the right direction. Yeah, well, it is in the right direction, but it's not as strong as we would really want it to be. Look at the GDPs of the other countries that we would sort of consider ourselves classed against. Everybody's flat GDP actually at the moment, but yeah, I mean, it's not a 0.1 is not a massive. Sorry, it's a 0.2, isn't it? A 0.2 increase on the monthly is not a massive bolster. This is just kind of where we are on the quarterly. So it looks positive on paper. You got to read into it. It looks like it's a positive. It is a positive, but we are only sitting at 0.2 on the quarterly. So all we're doing is saying, yeah, it's going exactly the same way as we knew it was on the quarterly. Market's having a knee-jerk reaction to it. That thing's coming back down this afternoon. Well, I say it's coming back down this afternoon. It's coming back down this afternoon if that comes out at 3.4 or 3.3. If it comes out at 3.5, pound US dollar is going to fly. So, as I say, it's all down to the news, isn't it? Swiss yen, we've got an hourly on it. Again, this is all off. Oh, it's already played out. You missed it. That's right. So this was the ADR, wasn't it? So yeah, Swiss yen, ADR, it's already played out. Euro odd. Right, so all the euros. Okay, so all the euros are positive. So the vast majority of your euro pairs are buys because of COT. So we've got COT and fundamentals on the side. We've got retail shorting the euro on the majority of pairs at the moment, which is obviously bullish for us. We've got a couple which aren't. Obviously, the euro US dollar, because the US dollar is so strong. So there's no positive bias from fundamentals or from the futures market. So you've got to literally go with what happens with retail, and that flicks it basically from a -2 to a -6. So it's always a sell, the euro US dollar, but it's going to be one of those sorts of sells, not a big one. Euro New Zealand is the other one. There's no bias at the moment. For some reason, they are short euro against the New Zealand dollar. So therefore, it's a long. But when that flips, that becomes a -3. Sorry, that comes in a -5. So that becomes a stronger sell than the euro US dollar. So everything bullish, euro. So at the moment, we're looking at all of these, and they're all extended to the upside because we've had upward movement. So when you're mean reverting these, obviously you are going against the current trend. However, like I said yesterday in the Telegram group, you can mean revert against a trend. Yeah, every trend has a pullback. That's what a trend is. Yeah. So mean reverting is more dangerous because you're going against the flow, but they have to profit take on their moves, and that's what you're getting in on. So these euros, which are currently all extended to the upside and all showing us short opportunities, they're all counter trend. So you just got to be careful with them. But we've had a nice pullback on that one this morning. M5 reversal alert, lovely little drop. So anything, if you want to trade mean reversion against the trend, you want to really scalp it because you're going to get squeezed if you're going to do it long term. Bitcoin is being punished, is it? So yeah, that's euro odd. So a quick look at Bitcoin. I haven't looked at it for a while. Oh yes. Right. So again, just to prove my point and labor the fact that there's absolutely no point in trading Bitcoin anymore, and if you do, you're nuts. And my God, the people that are buying it are in trouble. And especially the guy on YouTube who took out a 30 grand loan to buy a load of Bitcoin because he thought it was the best buy of the century. Oh, Hunter, you're in trouble. Yeah, so that's dropping. Why is it dropping? Because the stock market's coming down. Yeah, it's index linked. So Bitcoin is just another index linked asset. So if you're going to trade Bitcoin, why not just trade the index? Same thing. What one does, the other does. So, but look at the opportunities on Bitcoin in that period there. None. Look at the opportunities in the stock market. Woof, woof, woof. Money to be made. No money to be made. It's just no point. Dump it. It's dead. Gone. And if you got it, buy something else. Buy your wife something nice. It's a better investment, trust me. EuroCAD, very extended to the upside on the hourly and the 4 hourly. 4 hourly, we're up at the 80. This is obviously due to the Canadian dollar weakness. All these euro pairs are longs, obviously, as we know, so you want to be buying them. Apart from the Swiss franc, euro Swiss is the anomaly, obviously, because the euro and the Swiss, this is the tight ADR pair because these two are in the same zone, and the money that goes out of the euro goes through the Swiss National Bank a lot of the time, hence why you get that rather than a trend. So everything basically is bullish. You know, there's a good example. Look, there was a short I took on euro pound. I'm shorting it because of that. We know we're going to profit take it. Yeah, parabolic move from RSI low to RSI high. It's a scalp. You just want to scalp it because it's going up. You look at the moving averages. Yeah, it's going up. You want to be buying it, but there's plenty of opportunities to mean revert as well. It's just they're more risky, much shorter moves. EuroCAD is the next one, massively extended on the 4. Again, all of these huge extensions based on news reverting today or pushing further. If they're pushing further, my God, they're extended. We looked at this one yesterday, didn't we, as an extension? So you would have had an entry on this. But, you know, we've got that propulsion gap is our new target. And we've got that really nice resistance there, multiple resistances. Broke through it, retested it and off. So back down to there. So that sort of movement or that sort of movement. However, if the Canadian unemployment figures come down by 0.2% or something like that, we'll be down here later. Yeah, all depends. It's all down to the news. So we're just waiting for the catalyst. I would say if we get negative Canadian dollar figures this afternoon, I've got a feeling the market will not really be able to rally on the CAD because it is so extended and exhausted against the Canadian dollar. Even if we get negative CAD news, you know, this thing's not got far to go. It's run out. They're going to run out of cash. They will run out of capital. There's only so much you can push before you have to take profit on your move. Yeah. And even if that profit take is just a small flag, you've got to do something. So, you know, I would expect that sort of movement. But, you know, fingers crossed for positive US and CAD news this afternoon, basically, isn't it? That's what we're wanting. That's what we're expecting. That's what the market's factoring in, basically. So all these moves at the moment are very squeezy, but very parabolic. Euro Swiss, that's the tricky one at the moment. So we come down to a very nice support at the moment, which we are triggering at. So lovely opportunity for a long, back up into that propulsion gap on the 4 hour, nicely extended down to the 80. Do you know what? I'm toying with the idea of switching over to the 80 at the moment. There's been so many parabolic moves, isn't there, in the last month? I'm thinking maybe 80 on prop might be a good experiment to try at the minute, because although you know, you're going to get very few entries, you might get 1 or 2 per instrument, but going with 1% on them. Seymour, have I any experience of Audacity Capital? No, I've never traded with Audacity. I know of Audacity. I'll leave that there, Euro Swiss, so we know where we are. Let's just look at what the DAX is up to. Nothing. So the DAX is just basically, this morning, the DAX is, that's the wrong image. Oh yeah, no, that'll do. That's John Wick blowing his account, apparently. So I've gone with that one. That's John Wick buying. Look at the fingers again, guys. Look, they are not good, are they, with fingers? Look at him sticking his finger up. Look at the fingers. Something wrong with his fingers. But yeah, so this morning, Mr. Wick, it's not actually that bad, actually. The bodies are actually pretty good this morning, but we just got no directional bias whatsoever. So there's your 15-minute opening range, and we're still in it. Yeah. So again, all quiet on the Western Front. We're not going anywhere until the news this afternoon, unless we've got some catalysts that want to drive it elsewhere. But yeah, no, Audacity Capital, very well established firm. Sponsored ads, right? That's why so many people are setting up their own props. Thanks for the follow, Thomas. Welcome aboard. I didn't realize you could run sponsored ads on finance. You can't run sponsored ads on finance, I don't think, without a special dispensation from Google. But prop firms don't seem to be affected by it. This is why people are setting up prop firms. Left, right, and center, isn't it? So yeah, Audacity, well established, but their offering isn't great. And they are more about getting you on board. And God, they're cheesy as you like. They are so cheesy. So cheesy. But their offering to get you on board is, this is more of what I would class as a traditional. 5 years ago or so, if you wanted to trade with prop, you went to London and you got a prop desk. You paid a fee, usually 2 to 3K a month. It's called a desk fee, basically, which is some of the prop firms still use the terminology desk fees. You used to go and buy a desk, basically, and you used to trade in the room in there. And the advantage of trading prop in that environment is you are surrounded by other people doing the same thing as you. So you learn and you absorb information. A bit like the live rooms like this, you just absorb information. Here you go. Look, right. So apply for the program, attend an interview. This is all via phone, or you can do it face-to-face with them if you're local. And then they will let you on board. So it's an expensive way of getting in, and the profit split isn't great. Yeah. So when you look at their offering, it doesn't look as attractive, but these guys will hold your hand a lot more and give you education. They also sell education, so just be aware of that. Yeah, professional training. They make a lot of money selling training. Yeah, but they also do the funded stuff. So very small capital to start with, a little bit like the Fiverr's new Bootcamp. Very, 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 very similar. But yeah, I don't know. I've looked at Audacity over and over and over and over again, and I've never seen an advantage to using them over my Forex Funds, EA, and some of the other big guys out there, FTMO even, you know. And the fact that I have to do an interview would just annoy the hell out of me, especially this morning. If somebody interviewed me this morning and was like, so what makes you a good trader? I'm not going to answer that question. Go away. Not interested. So yeah, there's better out there, I think, is the honest answer. But they're still good. They're good. They're a good company, but typical cheesy London firm, really, with their advertising and stuff. I mean, not them as people, but their advertising is a little bit. All I need is some time to learn to draw nice fingers. Yeah. Prop firms are like tulips. They are at the moment. Prop firms, they are. I could literally, I looked into it. You remember yesterday in the live room, we looked into prop firms, and why are all these prop firms coming up with 8cap? Because 8cap are actually, and they've white labeled a prop firm. So basically you can just, I looked into it. I could be up and running as a prop firm this afternoon. Well, actually not, tomorrow, right? I could be up and running as a prop firm tomorrow. I just have to build a website. But the back-end infrastructure is supplied by them, which is why it all looks the same. They're all run through WooCommerce, which is the main e-commerce platform for WordPress, which is the largest CMS in the world, content management system. So the whole thing is run in an off-the-shelf, like install WordPress, install a theme, roll out the plugins, you're up and running, you're a prop firm. It's that fast. This is why they're appearing left, right, and center. 90% of them will fail because it only takes 2 or 3 good traders or lucky traders to run up a massive payout, and you haven't got enough payments in for evaluations, you're negative. So be careful with new prop firms. You really need some capital behind you, yeah, in case it goes wrong. if I signed up with a prop firm, a new one today, and I'm their first client, right? And I get through two stages. And while I've been doing that, they've taken on, let's say, 50 new customers at $500, right? They've got a $25,000 income stream. They fund me with my demo account. I go long with 5 lots, 5% of my account on the NASDAQ at the open. And it's one of those days where it just goes parabolic on the pre-market and we get an ADR hit. I press the stop button. They're at $27,000. They can't pay me. They go bust. Simple as that. You've got to have time with a prop firm to build up a revenue of these people paying for evaluations, because that's how you pay your traders in month one. So they, there's lots of them coming along, and some of them might offer really good. And the better they are at offering their thing, when you go on to like my Forex funds and you look at a good established company, the reason they're good and the reason they're established, and their website seems to be slow today, and their evaluations are good, is because, their evaluations are fair for everybody. Well, they've redone their website. Their fees are pretty good. It's all good. It's attractive, but it's still tight enough that you're going to get a lot of people pop the accounts. If you come up with a prop firm and you go, your daily starting drawdown is 10K and your overall drawdown is 15K, I'm going to pass that really easy. I could gamble my way through that in a day, no problem. But you're opening the floodgates with more loose rules for more people to make money faster, which means you're not going to get as many people in fast enough to pay for the people that pass. That's the business model. So Audacity Capital funds you with their own money. So I'm not surprised they want to interview you. Same as Fivers. Yeah, it's a lot harder to get funded. It's a lot tighter rules. Why? Because there's actual capital there. Most of them haven't. It's just the way it works. Anywho, let's carry on with analysis. Euro Swiss. So yeah, beautiful opportunity for a long there. Really nicely extended. We've got nice tweezer bottoms. Well, not tweezer bottoms exactly, but John Wick has entered the building. Yeah, so dropping down onto lower time frame, looking for reversal alert. Just about to get one on M15. M5, you've already had one this morning. Down there. Yeah, so structure's shifted. We've retested the structure and it's going back up. So that looks like a nice looking long at the moment. Again, all this is going to probably move off of the news this afternoon. I wouldn't be surprised to see this lit up like a Christmas tree later, especially after the moves we had yesterday. We had loads of ADRs yesterday. So if the news lands right this afternoon, there is every chance that all those ADRs are just going to be undone in the opposite direction. So, Edward Scissorhands? What? Weird comment. Don't get that one. Are you watching a film? Philip, Funded Trading Plus has no time limit. Has a great grading plan, only 2 hard rules. But yeah, Funded Trading Plus are awful. I've traded with Funded Trading Plus, yeah? Are you one of their students, Philip? Yeah. This is run by an education company. It's exactly the same. This is an off-the-shelf startup. The back end of this looks exactly the same as all the other back ends. And it's run by, it's like me. This is me setting up a prop firm, isn't it? Yeah. This is me setting up. Who is it? Which is the? It's a company that sells education. Yeah, Simon from, what's their company called? I can't remember. But basically, they sell training. Oh, this is about us. I can't remember which one it is. Don't know. They've taken it off the website. They used to have a link to their training, but they're a training company. Like exactly the same as me, yeah. I mean, I'm not a training company. I don't sell courses and stuff, but it's it's like me setting up a prop firm tomorrow. That's all they've done. They've got a bit of capital behind them and set up a prop firm. Simon is I can't remember what he runs a live room. This guy, a paid live room, which is a couple of $100 a month, and he sells a course, and he set up a prop firm. That's all it is. It's the same thing. It's just, and they're not good at all. They're absolutely terrible. Unless you're trading anything above M15, you can't get in the market because the execution time is 3 to 4 seconds. You can't scalp on 3 to 4 second execution. It's just not doable. Don't remain a tadpole. I did that back in the day and traded above a gentleman's club. Not easy nowadays with FTMO, my Forex cons. That's a good one, yeah. Trading above a gentleman's club. Yeah, the prop firms used to have to, if you wanted to get funded, and you know, in the old days, if you wanted to do education, I say the old days, I sound like a fossil, I'm not, but when I was learning to trade, you had to do that. You had to go to courses. I had to go and physically sit in a chair and write down notes on my laptop. But if you wanted to get funded, you had to go into a prop firm and you had to pay them a fee. And that fee, so you basically, when you started, you had $2,000 you got to cover in profit before you even get out and start making money. It was hard work, but you learn a lot. Montvilla, please check 100,000 for €100. Sorry, what? Please check what? You haven't said what to check. 100K for €100? You're talking about the fivers, aren't you? Yeah, you're talking about the bootcamp. This is the fiver. Do you know what? Their navigation's broken. Look. Yeah, you can't get to. Look, their navigation's gone. They've screwed their website up. I don't know what they've done, but they've screwed it. So the bootcamp, $95 for 100K. Yeah. But what you actually get is a 3-stage evaluation. So you get 25K, a 50K, and a 75. Fixed loss, fixed profit. No trailers, no daily drawdown, none of that crap. Really, really simple, straightforward. Either you lose it or you don't. But 3 stages to get $100,000. And then you have to pay another $200 on top of the 95. So it actually costs $300 or €300, which is fine. And then you're funded. So yeah, they're good. I like it. This is new. This is their new thing. They haven't done this before. And the other beautiful thing is the scaling, which you'll never do because you won't hold the account long enough. But if you could, for any reason, hold the account and scale it, your profit split goes up. That's the only downside. Your profit split is only 50% on the first payout. So, you know, and again, this is why they do this. Yeah, think about this. Think about the maths, right? As a prop firm, I need to get money in. How do I get money in? With evaluations. Yeah, that builds my bank balance up, right? So when I get somebody funded, I give them a demo account that is actually a funded demo account. I have to pay them on the profit split. So what we'll do is the first month, we will pay them 50%. Why? Because only 3% of people last more than 1 month in a prop firm. So we know for a fact, very few people will ever get paid 75% because most people, 97 people, blow it on week 1. Somebody in the Telegram group, if you're in the Telegram group, you know, someone in the Telegram group said this morning, they've just blown their FTMO in month 1. Everybody does. As long as you get paid, it's fine. That's the business model. That is the business model. We're prop. Do stage 1, pass. Do stage 2, pass. Stage 3, trade it up to 1, 3, 5K, whatever you need. Yeah. Stop. Leave the account alone. Don't touch it. Withdraw the money and then try again. Pop back to stage 1. As long as you spend $500 doing that and you withdraw anything more than $500, you're a profitable prop trader. But you're not going to hold an account for 3 months. You're not going to get here. No one holds a prop account for anything more than 3 to 4 months as a very bare maximum. It's less than 1% of people because the market has a strike rate with every strategy that means you will have a losing run, and that losing run will always outweigh your max loss. It's just the way prop works. They know the business. It's a business model. It's a mathematical equation, prop. It's just a very clever mathematical equation. And you just need to know how to do the maths. You don't go for this. You don't go for the hold. You run 5 evaluations, 10 evaluations. You take loads of them. You spend 5K on evaluations. You come out of it with 3. Out of those 3, if you can make more than 5K in profit on their 100K accounts or 50K accounts, you're profitable. That's the only way you get hold of big funding and hold it, actually hold it, is by doing loads of them and always having them open. That's why I have EA as my backup. Yeah. Because if I need funding fast, I need someone that can do it. These guys, I can't get funded within 10 days. If I blow my accounts there, I need to get back in the game fast. These guys will fund me in 1 day. That's why I use these guys. But they are $50 more expensive than these guys. So why would I use them? I use them. I only use them as a backup. And I have got a backup running at the moment because I needed one. And if the market carries on doing what it's going to do today, I might need another one. Squeeze. Hi everyone. Hi Astro. Nathan, thoughts on moving stop to break even versus letting trade play? Never move a stop to break even. So basically, think about, let's do an example. Not on that. So you've gone short here. Yeah. You've entered there. Yeah. Market's pushed down and pulled back up. Forget that. That you wouldn't have got into because it's overnight swap. But market's pushed down, it's pushed up, and then you've had a big catastrophic collapse. It's broken the Asian low. You've gone, excellent, my trade is on its way. You move your stop to break even. The market pushes up, takes your stop out and runs. Yeah, that's what happens when you do break even stops. Break of structure, go long, enter the market, moves up, move stop to break even, comes and takes your stop, runs. Yeah, market structure is that. We take breaks of market structure here. Market, we know, is going to come back and retest because that's what market structure is. So if you ever use a break-even stop, 90% of the time, the market will do exactly what you tell it to do. You've put an order in the market to say, take me out without money. The market will come and take you out without money. If you don't put an order in the market to say, get me out without money, you won't get out without money. You'll either get out with a stop or a load of cash. Break-evens are the worst thing in the world. There is a point you do use a break-even. Well, I use a break-even. And that is when the market has really got far. And I think, right, so my target is here. I'm short here. My target is here. Yeah. We're like an ADR away from my entry on the way to the target. So I'll go, right, yeah, all right. If there's a catastrophic news event and we're going to get an ADR rip to the upside, yeah, get me out. Because if that happens, I really don't want to be in this trade. But I'm not going to put a stop loss in the market that is going to stop me out as soon as my trade starts, because it's going to stop me out. You can use a trailer to reduce your risk, but leave it an ADR behind and let it trail an ADR or half an ADR behind or something like that. That's fine. But stop losses stop you out. I'm calling them now, I've renamed them. They're all called stop profit. So I just got to put this bloke on timeout again. This Henry bloke, he's just basically wanting to start problems. So can't be asked with idiots. Have I heard of trade management? For God's sake, Henry, go and watch the course. Go and watch the course that I've been developing for 15 years and just bloody piss off. People just want to burn. People want to see the world burn, don't they? Yeah, so don't use a stop is the honest answer. If you use a stop, you'll get stopped out. I now call it a stop profit because all it does is stop your profit. Whether you put it above your entry or below your entry, it stops the move. The move is what we are making money on. Yeah, it's coming down here. We know that. The move is going to go like this. We don't know how it's going to get there. We just know it's going to get there. So if you put an order in the market to get you out the market will most of the time get you out. Yeah, whether it's a trailing stop, a break-even stop, or a stop loss, its purpose is to stop you out of the trade. If you use it, you will get stopped out. If you don't use it, the market will breathe and it will move. That's what it does. And as soon as it gets to where you want, you get out. Yeah. So yeah, and it's the same with trailing stops. You'll see me use trailing stops regularly. I use trailing stops, but the trailing stops I know are going to get stopped out. The reason I put them in there is because I'm happy with the amount of money that I've got, not the fact that I think it's going to go up. I don't know where it's going to go from here. I haven't got a clue. But what I do with a trailing stop is I put it above there and let it trail down and let the market decide when to get me out. It may go down to ADR. It may come up. I don't care. But if this is $500, for example, locked in, and I'm happy with $500 because there's a news event coming up in 3 hours' time and I'm not sure which way it's going to go, or I've got to go out for the rest of the day, and what I don't want to do is just not take that profit. I'd rather have it banked and put in the P&L. I will put a trailer on. But I'm putting the trailer on because I want to get out the market. Stop losses get you out. Take profits get you out. Yeah? If you use a TP, right? I don't use take profits in my trading at all. The EA, the Market Reversal Alerts EA, doesn't use a take profit. It uses a monetary amount I want to extract from the market, which is a percentage of my balance. If I use a TP, what it will do is it will take me out. It will take the profit, right? If that's going to go 3 ADR against ahead down here now, why would you use a market order there that is going to get you out with that when the thing's going to go like that? You're missing 2/3 of your profit. Yeah. So again, let's say, for example, I'm in a short here, right? This is in profit sitting here right now. My TP is there. We've got a news event coming out at 1:30 that could drive every currency going absolutely wild, right? What I will do is I will remove that take profit and I will put a trailing stop on it. So either I will take the money because the news has made it go the opposite direction, or I will let this thing go parabolic down and make me as much as I can. The best trades I've ever had, the 8% winners, they haven't made money because I got the direction right. They haven't made money because I got my target spot on. They made money because I was in the market and it happened to be a news event that spiked the crap out of it. It went parabolic. And I was like, Jesus, look at the amount of money I'm making. I'll put a trailer on that and let it ride. Yeah. Orders in the market get you out the market. If you don't want to get out the market, don't use an order. Yeah. So again, it's all covered in the bootcamp. Go and watch the bootcamp. It's all free. It's on the website. And it basically explains how position trading works. There is no stops involved, but there is also no 0.5%, 1% crazy risks involved either. You're using very small risk multiple times to build a position in the market, which you will take out when the market wave is in your direction. But there's no stops or take profits used, because if you use a stop or a take profit, you will get removed from the trade. We want the trade to play out. Yeah. So when the RSI is extended, we start getting into a position because we know there's a profit take move, yeah? But we don't put any orders in there to say, get me out if it does this, get me out if it does that. We just get in. We wait for the structure to play out in our favor and we exit the position. This is how you make 10, 15% a month. Just by moving, letting the market move. When the market gets down here, it goes up. When it gets up there, it comes back down again. Yeah. If it doesn't get you out on that type of move that you're expecting, you scale in and you scale in and you scale in and you scale in and you wait for the exit. But this trade is not 1% risk. If that trade was 1% risk, you'd be sitting in 25% of drawdown. You can't do that. You get in with small amounts regularly on multiple positions and you just extract the cash. But if I get into a trade here, let's take this one for example. This is a perfect example. So if I get into a trade there, you would have had a reverse alert there. If you get into a trade there and you didn't take that exit, right, and you put a stop loss there, you're stopped out. Yeah, so you get in, let's say you got in there as well, you get stopped out there. You get in on that little push, you get stopped out. You get in on that push, you get stopped out. You get in on that push, you get stopped out. You get in on that one, you probably make a profit. Yeah, why take this? Why take the loss? What's the point? Why not just get in, get in, get in, get in, get in and get out? And if you didn't get out there, fine, get in there and get out there. Yeah, build a position because the market has to go up and it has to go down. If it doesn't come down, it can't take profit. It can't take profit. You can't make money. If the banks can't make money, the market doesn't exist. So the market will always have structure. You just ride the structure and wait for the structure to be in your favor. It's like the Hunger Games. Let the odds forever be in your favor. They're never in your favor. This is why everybody loses money in the market, because they won't allow the market to let their trades play out. They put an order in that says, get me out the market with a loss. So what does it do? It gets you out. It's crazy. But the bootcamp covers all of that. Triz, I was answering your question, Triz. No stop loss. What advice? There you go. Michael, haha, brilliant. You tell him. Any other day I'd be up for a fight, but today I just can't be bothered. My energy levels are too low. My arm's hurting. The drugs are kicking in. Chizzy, watch the bootcamp. Oh, right. Michael's just said exactly what I just said. This is the problem with being behind on the chat. Pound US dollar I've already covered, Jonathan. It's going up or down later on the news, but I'd be shorting it. It's a short at the moment. Based on US dollar strength at the moment. Again, right now it's a short, unless the US dollar, if the US dollar figures come out as expected on unemployment this afternoon, or better than expected. So if we're on a 3.4, if we get a 3.4 or 3.3 or lower, we're going to get a rally on the US, and obviously the US, pound US is going to come down. If we get a negative, we may well get some more movement to the upside in the downtrend. But just because unemployment has started to go up doesn't mean that the Fed is going to change their policy. They're not. It will carry on going down. Samuel, been listening to you for the past 10 minutes and you're talking about trading without stop loss or take profit. You're basically telling people to risk their full account. No, I'm not, Samuel. Go and watch the bootcamp. And the structure doesn't play out and you lose money on your full account. Mental advice. Yeah, you're exactly the type of person that I get all the time, and I'm just going to mute you as well because you have not done what I've asked you to, which is go and watch the bootcamp. It must be the day I get this every now and again. I get a day full of complete idiots. And do you know why I think it is? I think this is what it is yesterday, right? Look at yesterday's YouTube live room, right? And look at the, where was it? The New York yesterday. Where are we? Oh my God. 9th of March. Is that yesterday? Yeah. Right. Look at the URL. This is the URL of yesterday's live room. I'm just going to post it in the group. All right. This is why I think it was. Can you see that? Can you see the URL? Just pull it down. I think this is why it happened. Yesterday, YouTube decided to use the word TWAT in the URL. And ever since that stream happened, in Telegram, MQL5, and now in the chat in here today, I've had nothing but those coming in and talking to me. And I think that's what it is. YouTube has forced every TWAT in the world to come and contact me this morning. And it's just doing my head in. Anyway. It's YouTube's fault. I'm sorry, guys. It's YouTube's fault. It's not me. One of those days. They come out the woodwork. They really do come out the woodwork sometimes, and there's just nothing you can do about it. Idiot syndrome. I've got 38 likes this morning. I've got 103 people in here. There's only 38 people that have liked the stream this morning. So obviously I'm not being quite as funny or as I thought I was. I'm obviously not being very helpful, but sometimes you just can't win. Hang on, Brian, put your coffee down. Don't spit all over the screen again. It's the market makers. Yeah, they've got it in for me today. They're just up. They're up for a fight, aren't they? This is sort of, and now all these people now I'm banning from the chat. They're all going to go off and tell their mates to come in this afternoon on a non-farm payroll stream, and they're going to go, just annoy him. He gets really angry. But this afternoon, I won't, because I will have calmed down this afternoon. It's just this morning I've had a Telegram DM. I get so many DMs in Telegram. I've got a Telegram group, which is used by a core amount of people, but 99% of people decide not to use the Telegram group because I don't know why, but they just DM me instead. So I just get loads of DMs. This morning, it's just been literally every DM I've opened, and I do this in bed. I lie in bed with my laptop, open up, and I answer the DMs in the morning. Every DM was just like nothing helpful, rude, or just, you just have to think, are you 2 or are you 20 or are you 40? Because you're talking like a 2-year-old. oh my God, this has collapsed. What do I do? I'm in 35% drawdown on my account. Well, why are you risking? What are you risking? I'm risking 2% a trade without a stop loss. For God's sake. Have you watched the Bootcamp? Yes. Then you obviously didn't listen to it, did you? I don't know what I can do. I can't help. It's just, it's been one of them. Everybody has them. They're all gone. It'll be gone by the afternoon. Euro pound. Back to trading stuff. Euro pound coming down like our house of cards at the moment. We've got a strong pound-ish at the minute. This is that area I was looking for yesterday, which we didn't actually get to. We are now getting there, but it is slightly getting run over. So again, it's nicely extended on the hour. I say it's nicely extended. It's not nicely extended on the hour. It's extended on the hourly. The entry was there yesterday and you're already out. So if you're not out of it, then yeah, somewhere down here today, you'll get another entry. That would have been too close to get a second. So a second would be there. Target is there. But not the greatest in the world. It's the very tight ADR, a euro pound, and obviously it's a very sideways pair. Again, structure, I've been shorting this. I've also been longing it. Can't really see that, can you? Whoops, wrong one. So yeah, I'll take longs on this and I'll take shorts on it. There's no bias either way on the scorecard, long or short. So get in, get out, get in, get out. Could have got in there, didn't. Could have got in there, didn't. But, it's a good pair. You can trade it in any direction. Euro New Zealand. Oh my God, look at the chat. Everyone's writing essays now. This is why I don't get anything done. These guys don't understand drawdown control. They think every move is a squeeze and your whole account is gone. Yeah. Yeah, well, they haven't watched the boot camp. That's the thing. It's like they come in. This is the thing. If I go into a Telegram group, not a Telegram group, a YouTube channel, and I watch a stream of someone, which I haven't done for ages, but I used to go, oh, that looks interesting. Go to their website, find out more information, follow the links in the description, not come in and go, oh, you're an idiot. It's like, well, I'm not an idiot. You just have no idea what I'm talking about. It's like walking into a lesson, not knowing what lesson you've walked in and going, why are these people all speaking French? You're all idiots, walking out and realizing it's a French lesson. It's like, Jesus, spend 5 minutes and learn what the hell thing's about before you start slamming into people. Some people have been stung repeatedly by the market and room to room, denigrating the mythology without bothering to do their own due diligence. Laziness. Yeah, it's just, I get it. I've been there. Cadyen Go. Yeah, you're on Cadyen Long, aren't you? Are you? Yes. Yeah, I get it. I've been there. But I'm not the sort of person that wants to be spoon-fed everything, and I never have been. And I think that's the problem. Everyone's just lazy now. It's a generational thing. Everyone's lazy. Pound US dollar's pumping. We just made new highs. Oh, no, we haven't. Sorry. We're just about to. We're just testing the highs. If those highs go, that propulsion gap fill fails, we've got a rally on its way. Not sure if you have covered gold yet, but if you haven't, yeah, I'll have a look at gold in a sec. I'm going to squeeze 3 to 4% drawdown. Yeah. Thanks for the follow, whoever that was, Chris. Oh, and I missed you, didn't I? Chimhao Comedy. He's obviously, he's subscribed because he thinks this is a comedy channel. This is a trading channel, but I also do comedy. I didn't until I started these drugs. I'm sure it's these drugs I'm on. They're prescription drugs, before you say anything. I've got a trapped nerve in my shoulder. It's prescribed by my doctor, but they are opioids. It's okay, you're having a bad day. You were talking about Telegram. I can't message on the Telegram group, on the Telegram channel. Nothing rude. Yeah, I don't mind. No, don't worry, Tim. I don't mind DMs. Honestly, DMs are fine. I get them all the time. It's not an issue. You can't message. If you can't message in the Telegram group, leave the Telegram group, Tim, and rejoin. When you join, there is a CAPTCHA question that should come up. But for some reason, for a period of time, the CAPTCHA question didn't come up. And when you answer that CAPTCHA question, it then unlocks your privileges to be able to join and to be able to type. That broke, I think. So if you leave the group and go back into the group, that capture isn't there anymore. You should be able to then type. For anybody that can't type in the Telegram group. I'm not sure if you cover gold yet. Yeah, we'll do that in a sec. That's about 2 losing trades if you have 2% risk hitting stop loss. Yeah, exactly. So as Big Papa's just said, he's in 3 to 4% drawdown on his account, which is a few trades, isn't it? Everybody, but that 3 to 4% drawdown is unrealized profit. It's not loss. It's just drawdown. It's what your account is there for, to be drawn down into. It's there to be used to put risk on the table. Again, Bootcamp, watch it. Do you enter into positions before non-farm payroll numbers, or wait until the numbers come out and then trade? I position trade, so I'm in positions ahead of the news. Yes. I don't trade. I do not trade news. I don't trade this. I'll be on to watch this, and I might take a trade if it goes. But this is what's moving the market today. Yeah, this is not why the market moves. Non-farm employment change. The market moves because of the employment rate, unemployment rate. That's the key leading indicator the market uses to determine direction. Non-farm payroll figures are very much the same as unemployment claims and ADP. Yeah, they are not leading indicators. Unemployment is. But I don't news trade. I don't trade because of the news. There we go. Highs broken on the pound US. So I just need to check an account I've got open. Gutted. I've just blown the Fidelcrest account. Gutted. I took a loss on Fidelcrest yesterday. And I thought this morning, right, there's a good chance we're going to get a pop on the pound. So I took this pound long here. Right. Gutted. Oh, well, never mind. This was phase 2 evaluation, by the way. So, I can't see it. I've zoomed in too far. I just over leveraged ever so too slightly. Yeah. So there's my entry. There's my ad. I put a break even. I put a trailer on this one, which obviously took me out. That one stopped out there. That's where it is now. Yeah. That was $340 profit, which would have got back yesterday. And I decided, right, not to do that, not to take the profit there, because that's what I was looking for, was potentially a stop run. And it came down, took my stop out, and now we're up there. That is my TP, as you can see in the market there. Yeah, there's the TP on the trade, or both trades actually. The TP was there. That TP was just under $600. But obviously, it's a $500 max DD. So trade idea, and this is a perfect example, guys, of using stops, taking you out the market. Your trade idea 90% of the time will be correct. The reason you fail as a trader is nothing to do with your skill as a trader, your whatever, right? Your reason you fail is because you put orders in the market to tell the market to get you out of the market. The market therefore gets you out, and then the trade idea plays out. Remove those, you will remove the failure. But on prop, I have to use a stop because I've got stupid risk parameters. So there you go. Fidelcrest is gone. Sad face. Never mind. Fivers is still running though. Over leveraging. It's endemic in the industry. Yeah. It's what kills everybody. Over leveraging. There you go. That's just showed you it. I've just showed you it. That is over leveraged. That is an over leveraged trade. Both of these trades are 1.2 longs. They're over leveraged. My risk on the positions was $350. Yeah. My max drawdown on the account is $500. That's massively over leveraged. But does it matter? No. Why? Because this is a proper valuation and it's not real money. And also it's cost me a couple of $100. And I know for a fact, it's not even cost me that, is it? Because it's a 10K account. It cost me 81 pounds $95 or something it cost me. 95 euros, 100 euros, something like that. Doesn't matter. I can do this 5 times, get one account, trade it up to 2K and make that money back in a second. That's how you do prop. That's what prop's all about. Anyway, there you go. There's the fetal crest gone. Stage 2, that was annoying. Anyway, that's it, Big Papa. I'd rather be in the simulator rather than making a hard loss. TWATS, traders with average thoughts. Oh, that's a good one. I like that. Traders with average thoughts. I like it. New Zealand dollar yen, we got another 8 off to the news. So again, this is a lovely H1 M5 from yesterday. There's your hourly extension. There's your entry. There's your exit. Beautiful. If you took. Having 3% drawdown doesn't mean I can't recover and get out of the squeeze. Thoughts on first class Forex HFT package? First class Forex. Is that a prop firm? Don't think I've heard of these. They've nicked my balls and bears again. Look, guys, they've nicked it. That's mine. It's not mine. It's from a stock photography library, but hey, everyone's using it because it's good. One step evaluation, 100K, $950. It's too expensive. Yeah, these one step evaluation. Just think about this for a minute, right? If you're doing prop, right? Let's look at my Forex funds as an example. 100K on my Forex funds costs $500. If you do a one-step evaluation with these guys for that, you're paying double the price. Yeah. No minimum trading days. You can pass the same day. Right? Ask yourself this question. If you're doing prop evaluations and trying to get prop funding, how many have you failed? Yeah. Why on earth do you think by using this company, you're going to pass in one step? You've been doing one step or two step evaluations on other prop firms, and you keep getting through stage 1, like that Fiddle Crest, for example. That was a perfect example. Got through that Fiddle Crest, just blew it on the second with a stupid trade. Yeah, the guy in the Telegram group this morning got through phase 2, passed, got funded account, blew his funded. Yeah, it happens. Why pay twice as much? Yeah, if you're going to pass, you're going to pass. If you're going to fail, you're going to fail. You're going to pass that, maybe, but it's going to cost you twice as much. When you get the funded account, it's like taking a step 2, isn't it? Yeah, so normal 2-stage evaluation. Once you've passed that one, when you get funded, basically you're on phase 2. How many phase 2s have you blown? You're paying twice as much money for it. It's just not worth it. Take 2 evaluations with my Forex funds. Yes, it's 4 stages in total, 2 stages on each, but this will make you much more disciplined. This will make you gamble. What you're saying here is you're not saying, but what your brain is saying is, if I pay $950 now for a 100K account, if I can pass that today, because I can, I'll be able to have 100K this afternoon. That's the way most people tend to visualize this, which causes you to over leverage and over trade. They've also got an HFT arbitrage one, have they, or something? Oh, they've got a 2-step as well. Oh, there you go. Again, 2-step, great, but why pay more money? Same thing. 5% and 8%. This is my Forex funds. This is just my Forex funds. Exactly the same, except it's $25 more expensive. But yeah, just another prop firm. Again, it's the same thing, isn't it? I'm not trading today. My earlier gold trade in the week has been seeing me right for the month. Very nice. We'll find my sledge and a nice big hill. FCFF is a red flag prop. FCFF? Don't know what that is. Scam? FCFF? What's... Oh, first class Forex fund. Sorry, yeah. It's a scam, is it? I think prop firm will be coming after me. I don't get what for. I haven't said anything. All I'm saying is these guys are more expensive than my Forex funds, and I trade with my Forex funds. I'm not saying they're bad. I'm just saying, why would you pay? Why would you do this? Why would you do this? If you know, it's the same. I get asked this question. I don't get asked this question. I get people contacting me all the time. Can I use your EA to pass an evaluation? Yes, you can. Can you trade? No. Why do you think? Why on earth do you think, if you want to use an EA to automatically pass a stage 1 and stage 2 evaluation for you, what are you going to do when you get this? If you can't trade, when you get this 100 grand, what are you going to do with it? You're going to blow it. It's all these ones like, we will pass your prop evaluation. There's loads of these ads on Facebook. We will guarantee to pass your evaluation for you. Brilliant. I've never traded a day in my life. You're going to give me 100 grand? What the hell is that person going to do with this? If you're not a profitable trader, what are you going to do when someone gives you $100,000 because you've paid someone $1,000 for an EA that is guaranteed to pass an evaluation, but you can't trade and you can't use the EA when you've got your funded account? You know, it's just nuts. There's businesses making money off of businesses making money off of businesses, isn't there, in the prop industry? I've got affiliate links on my website, and I'm totally open. These are affiliate links I have on my website. Yeah, I don't make any money from them. I don't think they work, to be honest. Somebody said, I've just signed up with my Forex funds because I saw it on your stream. I've looked at my stats. I haven't got any sign-ups. I don't think it even works. I don't get paid. I don't care. I'll probably get like $20 a month or something. But yeah, it's just, you know, there's so many of them out there. It's just making money, trying to make money. Sell pound US dollar. I wouldn't at the minute. Euro US dollar to buy. I don't know. Can you trade? No. Exactly. Let me just finish the analysis. Let me get through this. So we wanted to look at gold. Let's do that one first. So gold is a sell at the moment. The reason it's a sell is because of those. Yeah, fundamentals have shifted to bullish US dollar. So this is a US dollar cross. So if the US dollar is going to remain strong, you sell gold. So shorts at the minute. The entry is, yeah. So we looked at this, didn't we, yesterday? And I said, these are your targets. We've hit TP1 if you took the long yesterday that I was saying about. That orphan propulsion gap up there is next target. You know, this is, if you've been in here for a few days watching me, yeah, you're seeing it all play out. You're seeing everything I'm saying play out, aren't you? Yeah. The propulsion gap. So I said, you know, this move here that we got to that propulsion gap will come back down into this propulsion gap because these are the next targets, which is what we did. And then I said, right, from here, we're going to head up to there and there. We started to move into the propulsion gap. We sold out of it. We filled the propulsion gap. Now we've moved up into that one. We've left this one in place. So what's going to happen today is either that or that. I don't know which. No one knows which. If we knew which, we'd be billionaires. We don't know which. So you take one of the trades and hope that that's the one that goes right. If you don't want to take one of the trades, pound Swiss has just hit ADR. I'll look at that in a sec. That's an important one, pound Swiss. If you get into this today and you say, okay, well, I'm going to go for the long one, and you hit the buy button and it comes down to here, that's fine. What do? You add another buy there and wait for it to go back up to that one, and then you get out up there. If you take the short today and it goes down to there, you get out. Happy days. Ah, that is just killing me. That is. That fiddle crest long on the pound US dollar. Literally 10 pips. That stop loss cost me an evaluation pass and a $250 payment. That's the difference between a winner and a loser in prop, is a stop loss. So yeah, gold, you know, that's how you play it. Yeah. If you go short on it, targeting that one today, yeah, you get in there and it goes up to there, fine. Take a short there and wait for it to come back down to there. Get out down there. You're never going to get the direction right. You can't time the market, and you can't have any clue which direction we're going to go in. Euro pound. Pound's pushing hard. Really hard. Thanks for the follow. Aswin, and Mandy. Welcome aboard. So there you go. So can we have some more thumbs up as well, if possible? Just to see if we can get more people in the stream. Oh no, Nirav's just arrived. Don't use candlestick charts. Use my candlestick charts. My candlestick charts are different to your candlestick charts because my candlestick charts have got numbers inside them. Candlestick charts. Sorry. No thanks, Nirav. Busy today. Can't be bothered. Yeah, longs and shorts, basically. Up to you, but I'd be looking short. But, however, this afternoon, what's going to happen at 1:30? News. This is going to go up or down. The reason it's going to go up or down is going to be based on whether or not this figure comes out as a positive or a negative. So whichever way you press the button today is going to be determined, the result, by whether or not it's a positive or negative unemployment figure. So at the moment, the fundamentals for the US dollar state that you should be selling everything against the US dollar and buying everything US dollar cross. Yeah? Because the US dollar is strong, because all the fundamentals say that the US dollar is more attractive to invest in than every other currency. The institutional positioning is long on the US dollar. Retail at the moment across the board is very mixed, but overall, you want to be buying US dollar. However, if that fundamental shifts this afternoon to a negative, you're going to be knocking some of this off, and it's going to become a range bound opportunity potentially on some of the pairs. So you need to pay attention to the fundamentals, which is why you don't use a stop, because if you get in now short and it goes up, you stop out. What I will do is get in short in the fact that I know it's going up and I know from there it's going to come down. So I will get in again there and then I'll exit my position. I don't lose money because the market is moving. And that's what everybody else does. They lose money because the market moves. The one thing you know the market does is it moves up and down. Why on earth would you put an order in the market to get you out of the market when it's moving? That's when you make money. Crazy. Don't look at it. What is it? Oh, Mirav, yeah. I love Mirav. I've done his course. I bought his course. I bought Nirav's course because I was curious. And at the time I was really getting into futures again. And everything he taught me, I already knew. And all he gave me was the ability to merge market profiles together in the futures market using a piece of software which I had to pay loads of money for. And it's, yeah, anyway, I'm not going to talk about other courses. Pounds we're on, aren't we? Right, so all these pounds, we just had ADR hit on Euro Pound, Pound Swiss, and Pound Yen. Pound is going lovely parabolic to the upside, which is beautiful. Pound New Zealand also hit. So this is obviously off the back of the GDP. They're just starting to make the move. So all of these are going to be mean reversion opportunities to get in short on the pound at some point. Just look for areas really that you're likely to get moves from. So we just got propulsion fill there. Yeah, we're coming back down into there. So just, you know, this one, it's not really, is that extended? Yeah, we're extended on RSI on the hourly, 4 hour also. So yeah, this is perfect. It's ready now. Drop down, wait for a reversal alert. It's going to be a fair old distance away, that one, because of this parabolic move. But if we get that sort of movement, yeah, you're going to get a tight reversal alert and a nice entry on that one. See what the price action does. But yeah, lots of those triggering at the moment. So looking at the pounds, the pound odd, very extended. On the 4 hour, oops. Yeah, we're back up at the 80 hourly. Back up there. So yeah, nice opportunity for shorts. It'd be nice if that gets to ADR today. Pound CAD, same thing. So short. Again, looking at the buyer scorecard on all these. They're all... Oh, actually, no, we've got some buys now. Well, they're range bound, rather. So yeah, you got majority shorts. That's because we've got retail offside on it at the moment. We've got some longs there. That's all because retail is positioned short. Yeah. Again, the reason I went long this morning was because we had positive news and retail sentiment told me to go the opposite way. Go away, Henry. Well, isn't that good? Pound CAD's going up. I told you. You've got one trade right, Henry. Doesn't make you a trader. And the fact that you're still here listening to me tells me the fact that you actually agree with what I'm saying. Can I do a perma block? Yes. Bye, Henry. Go watch the world burn somewhere else. So yeah, all nice shorts eventually. I'm long on it, by the way, Henry. Yeah, just to, look, this is my trade. My trade, I've just come up here, look. Oh, that's OddCAD. Oh, no, that's because I've got OddCAD on the Trade Manager dashboard on OddCAD. Yeah. Look, pound US dollar profit is 200. I'm long on it too, Henry. I'm not disagreeing with you. All I'm saying is you're annoying because you think you know better. Just going to take profit. Just getting out of pound US dollar long. $400. Thank you very much. So I'm out of pound US dollar long, just to let you know. Why? It's got a very, very large shooting star at the top of a move. So it might carry on. That's fine. But I'm quite happy taking $400 on it. Again, I didn't use a TP. Yeah, there's no take profit in sight. I basically got in with positions. I'm getting out. If I had a TP on it, on the entry that I took down there, I would probably put it there and I'd have missed all of that. What's next? Pound odd, pound CAD. Again, extended 4 hour. Nice shooting start. The highs there. There's no real profit targets below, so we're going to come back down and we're going to retest that area likelihood at some point. Extending, obviously that's extended on the 4. Oops, extended on the hourly. Yeah, embedded on the hourly as well. So again, this has got potential for a massive move, like this pound CAD today. If we get positive CAD news today, this thing is easy got like a 150, 200 ADR. Yeah. Climbing up the stairs, falling down the elevator shaft. Pound Swiss, this is the bad boy at the moment, or was the bad boy yesterday. So nice big reversal alert just about to go in on the hourly there. 4 hourly. The RSI extension was all the way back here. So if you got into the pound Swiss, you would have got in somewhere in here in this propulsion gap, expecting a push back up into here. We obviously up into there as well. We obviously haven't had that yet. And obviously yesterday we had the parabolic move down. So second entry was down there. So you're probably out of this now. If you took that one on the hourly. Yeah, I mean, you would have been in somewhere in here or here, and second entries would have been, what's this, 38 ADR in it? Half an ADR rather. Yeah, so that's an ADR. So you'd have been in probably 3 or 4, maybe, depending on where you got in. You're out. Or you're holding. But you're a 125 ADR nearly, so I'd be getting out. You taken here, maybe get out of, I'd leave that one on if you got one on there. Get out of that one. Yeah, get out of that one or half of that one and do some drawdown control. It's only just extended though. Pound New Zealand, 4 hour RSI to the upside. That's hit the propulsion gap. We're left targets to the downside. We've also got this area down here we haven't touched yet. So you know, they're still coming down, this pound. It's just a matter of when. So all nicely extended on the 4 hour. We're extended and embedded on the hourly. So you would have already been in this probably in Asia. There was no entries yesterday on this. So this ADR got extended, or sorry, the RSI got extended here. You may have got an entry on a reverse alert in there. So that was yesterday at around about 194,300. Yeah, there was no reversal alert yesterday. So since this move started, there was no entry on the hourly. So your first entry on the hourly would have been in Asia. So you're just in the one position at the moment on this. So nicely extended in the propulsion gap. It doesn't look to me like there's an awful lot of sellers stepping in there. They were starting to sell it, but they've just been run over. So this, I would say, has got a very good chance of coming back up and retesting those highs. An ADR hit today on that would be a lovely one. You've got limit orders, which are going to trigger at the highs. Yeah, so there'll be a load of orders sitting up in this area, ready to fire. So when we get there, if we get there, you'll find you'll probably get a fast reaction out of the highs there. Pound US dollar. So that's just obviously extended. I've just exited that long. I like it short. It's a short. Although Henry would disagree with me, but the fundamentals obviously are short. We're in a pullback drop situation at the moment. So fundamentals are, there's no way the pound is stronger than the US dollar at all, but obviously the pound will push. Yeah, the pound will go up against the US dollar, and that's why COT is a long term. When you look at the COT figures, yeah, and it says on the website as well, when you're looking at fundamentals, and this is basically what fundamentals and how they're measured. This is the futures market. This is the positioning. So we know that these are following fundamentals. This is not a timing tool. Yeah, fundamentals do not mean that something is just going to go in one direction. It means long term, that is where we expect to get in and get out. So on the way, you're going to do all sorts of stuff on your way down there. Yeah, but at the end of the day, the moves in that direction will be stronger than the moves in the opposite direction. So the pound is pushing at the moment, and it's pushed plenty of times before, as you can see. There's lots and lots of pushes in the pound. Yeah, but the pound is coming down. The down pushes are harder and faster, and they will be. If we get positive US figures this afternoon on unemployment, this thing is coming down. Yeah, it's a short. But it's only a short at the moment on the hourly, the pound US. It was also a short in there. So you'd have been in there. You're getting in. You're not getting in at the moment on a reverse alert because it's too parabolic. And you won't get in on a reverse alert there because you're already in somewhere around here. So just looking for US dollar strength this afternoon. We'll see. See what we get. We're on the train. You can't get off. New Zealand Swiss. So big move down on New Zealand Swiss. If you look at this one from a fundamental perspective, we are range bound. Yeah, so we've got COT long, we've got retail short, so there's a complete mix. So it's at the moment it's kind of no direction, but obviously we've got that big strong Swiss franc movement, and we've had that weakness off the New Zealand on the news. So the fundamentals are a little bit out of whack at the moment. I would suspect, because we're 2 weeks behind on COT data because the CFTC haven't released them, I would expect this COT bias to have probably shifted, and this is more like a zero now. But we'll see. If we look at the New Zealand dollar Swiss, New Zealand dollar is sitting at the moment at 73% long. The Swiss franc is sitting at 72% short. Obviously, this is all changed. I don't think we'll get these figures like, you know, we're not going to go and suddenly sit there, but we could well be more down at the 60 marks on those, which obviously changes the scorecarding. So I think there's a good chance that this is probably going to pop. But overall, there's potential for that to happen. But also, because there's no bias on these in any direction, we could just pull straight back up into a range. This is what we call price discovery. And again, you know, not knocking Nirav, of course. Nirav uses price discovery and balance a lot as terminology, because that's what That's kind of futures terminology. Balance, price discovery, balance, price discovery, balance, price discovery, price discovery, balance, price discovery. Yeah. This is a price discovery. We could either do that, but we're more likely to do that. When you have a price discovery, what price discovery is balance is where we are happy to transact. Everybody that is transacting in these two currencies cross-border is happy to exchange their money at that price. Someone tries to push and get a better price, and they will usually get rejected back down to the previous balance, what we call a support bounce. Yeah. Yeah. And then we go into new price discovery, new balance. Yeah. Then we go for price discovery again. We come back to our previous area and go, no, we don't want to transact here anymore. We were happy transacting here. So then we try and see if we can transact at a higher level. Usually it will fail and we will pull back into the previous balance. This is kind of the theory behind multi-day market profile. At the end of the day, what most people call this is support and resistance, as we have been for decades. So it's all, as again, when you do courses, you will be taught the same thing in a different way with different terminology. It's the same stuff. Support and resistance. That's all you need to worry about. So when we look for getting into positions, we look at areas of support and resistance. There is a lovely area of resistance, support. Where are we bouncing? Yeah. Where are we likely to move to? What will happen then? No idea. Not up to us, is it? All we do is we get on with the moves with the market. So the market's exhausted, it's going to profit take. Where's it going to profit take to? Where it previously tried to trade. Where's the gap? There. Yeah. So that's New Zealand dollar Swiss. And we've got US dollar CAD is the other one. Can't be on for too much longer today because I'm back on at 120. I need a break in between. Got to go and answer the people that haven't read the website and looked at the courses. I am calming down now because I've just made a load of money on the pound US long, so I'm now happy and calm. I've got a CAD Swiss trade about to trigger on a buy as well. Let me just do US dollar CAD. So US dollar CAD, massive extension. Obviously, we are ready for a pullback on this thing, but it's a tricky one because we are so long on the US at the minute. The bias on this is tricky, to say the least. The US dollar CAD is a massive, massive buy at the moment. The fundamentals mainly are what is causing that, and the fact that we've got the COT positioning in the way that it currently, we think it currently is. At the moment, they're really short the Canadian dollar. And a lot of that is to do with oil, but that could possibly change. So we've obviously got the unemployment figures, which again are going to change the fundamentals. So this one today has got the potential for a monster move back down to here. If we get that US dollar expected or unemployment goes up, i.e. negative US, and we get the opposite happening on the CAD, we're going to get the mother of all moves on this today. The market at the moment has just paused up at the highs. Indecision. Yeah, what we're probably going to get in the next 2 hours or 3 hours is something where we just push back up into there again. Imagine if you shorted this with a stop there today. Yeah, that is 100% possible, depending on the news. Yeah, so obviously the opposite could happen. Or we could just get into, which is more likely on non-farm payroll, is a whipsaw, and we go nowhere. Yeah, so the outcomes of this are always completely unknown. If it comes out as expected, the market will probably do something like that. If it comes out as expected with that, we'll get the same thing. If these two come out with a completely unexpected result, which is anything 0.2 percentile out, right? Forget that point. 0.2 percentile out, i.e. a 3.2, a 3.6, a 4.9, etc. We're going to get probably a move, a proper move starting. Yeah. So you can imagine the scenario that we had yesterday with the CAD Swiss, yeah? Yeah, we looked at this one this morning, first thing, didn't we? Yeah. That is that parabolic move there. This is a 48 ADR. We did 70 pips in the session. Yeah. So it's an 1.5 ADR, 150 ADR move. Yeah. In the session. The reason is because we got opposite moves at the same time. We got a weak CAD news event and we got a strong Swiss event, and it just bang. That's what we're going to get. If that happens with the US and the CAD this afternoon, the same thing is going to occur. We just don't know which. We've got a reversal alert there, look. So it's just a textbook stop entry. However, what do they do on non-farm payroll? Liquidity runs. So if you put a stop in the market there right now, there's a high probability of you getting stopped out and liquidated, and then they move. Yeah. So the best thing to do is wait for the news event to come out, see how it's reacted, and then try and get into a position. But if you're position trading this, obviously you're already in it. But if you're already in it, you shouldn't be short. So, tricky. Just a quick update as well on the sentiment EA. So just for those that are following the sentiment EA development, this is changed again. Just move it back to. So this is when we started live testing on the 7th. Yeah. 11.42% banked. This is 0.5% risk per entry. 1.8% drawdown currently. Yesterday we banked 3.8%. Yeah. So look at this. This news day, non-news day, news day. So far, non-news day, but we banked £1,000. We were sitting in 1.66. So yesterday, for those that were in here, when we've looked at this in the morning, the afternoon, we got up to 5.5% drawdown on it, which is okay, stomachable, not a massive issue. It's only 0.5% risk. There was nothing that got to 1%, and the reason this got to 5.5% is because it's virtually trading everything, isn't it? Look, but that position there is in 1% of drawdown. Again, that one will have done drawdown control. Where are we? Account history. It's just, yeah. So you can see it's done drawdown control this morning. Look, yeah, we've been taking losses this morning. So it's scaling out of these moves as it should do. All the yen pairs, it's been scaling out of those gradually, but they're all starting to play out now. So it's working, guys. It's working. Obviously, you can see it's massively exposed because everything is, with retail sentiment, everything over the last few days has been hitting 75s. So I'm thinking the triggers I'm using at the moment are the 75s. Yeah, we're 86% long on. Look at that. It's beautiful. Look. 86% of the market is long. So right there, 76% of the market was short. So we entered short. Right there, 75% of the market, was long. Was long, not short. Was long. We got down to here. They added more long positions. So we added another short position. You couldn't make it up, could you? And this, the whole theory behind this strategy, for those of you who don't know what I'm talking about, I'll explain it quickly. Sentiment is, this is counter sentiment trading. So on the website, we've got retail sentiment, yeah, which is basically, it amalgamates all the open positions from traders through various brokers, yeah, and it brings in that data, yeah. Not that 99% of the market at the moment is long Aussie dollar Swiss. They're all long CAD Swiss. They've been long on this thing, and the New Zealand Swiss. They've been long on this all week, haven't they? All week they've been long. All week they've been long. What have we been doing? Shorting the crap out of it. When they suddenly go, all right, whatever, this is a short, it'll pop. We'll come back up and test that. We'll go long. But so all this is doing, this EA I've built, is it takes these figures, and if we are 75% or more in one direction, we counter trade it, yeah, and it will basically just get into trades on a daily basis until that sentiment play plays out, i.e. the market comes and grabs their liquidity from the opposite side of the move. Yeah, so that's all it's doing. But entering with 75, which is what I've got the EA set up as at the moment. Yeah, so I've got it set to 75. So it needs to be 75 long or 75 short and then get in the opposite way. What I'm finding is even that is too loose. I was using 60, which was way too loose. 75, we're in everything. There's very little we're not in, isn't there? Because everything's done it. So I think we also need to test this with higher stress levels. Yeah. 80s. 85 plus, maybe. That would filter out that. It would halve our exposure, and it would halve, obviously, the drawdown. And it would halve our profit, potentially. I don't think it would halve the profit. It would obviously reduce it. But the correlation between the profit and the drawdown is happy days, isn't it? So we'll see. But yeah, working well. Managed to get my login details for Fiddlecrest evaluation. Only 10K though, just try. Yeah, they look good. I'm happy with them, the way they work. So I did my very first evaluation with Fiddlecrest last week. Passed it in 3 days. Had to fill out all the paperwork for the contract because obviously stage 2 is actually funded with Fiddlecrest, for those that don't know. So you're actually on stage 2, you're funded. You get a profit split actually paid to you. So it is actually, Fiddlecrest is a 1-stage evaluation. Very low profit target, only 5% on the small accounts. Stage 2, which is what I've just blown, you have to sign a contract because you get 40% profit share. Yeah. And that's the one I've just blown, unfortunately. But yeah, all the paperwork went through fast. I got the second account once they'd verified my driver's license, passport, whatever I sent them. I think it was driver's license. Logins came through. I'm in. Perfect. So yeah, I can't fault them as a test. I haven't obviously been paid because I just blew the account. That trade, that pound trade that I would have just hit profit target with today, if I didn't use one of those stupid stop loss things, I would have then been sitting here waiting for payment and obviously just not trade the account and wait for them to pay me. So I haven't got verification of payment from them as I have with my Forex funds in E8 and the others, but I don't think there'll be a problem. Fiddlecrest have been going forever. They are one of the, I think 2018. Oh yeah, there you go. 2018. So they've been going for 5 years. These are almost, they're as old as FTMO. They're a big player, but I've never liked their evaluation. Their previous evaluations, I never liked them. They've changed. They've revamped their way of working a little bit, and these are much more attractive. These programs now, much more attractive, and they are literally in effect a stage 1, but you're only going to get a small profit share. Profit share is smaller. They've upped their profit share. This used to be really small. This used to be 50%, but it's now more. So they're now, I think, possibly one of the good ones to be with. But you got to wait 11 days to get paid. Yeah. So again, it's longer than my Forex funds. It's longer than E8. So, and it's a little bit more expensive. So, there's pluses and minuses for all of them, but this would go onto my list, I think, as one of the top 3 now. Definitely. I like a lot. Thanks for the follow, Paolo. And Denilson. I'm useless with names. You'll learn. You will learn that. I'm useless with names. Right. So that's all the analysis done. If anybody's got anything they want to cover, let me know. Let me just catch up on what the chat's been saying. Canned air and load of towels. Big Papa. Yeah. US Tech, PZ. You want to look at NASDAQ? There's no point in looking at the NASDAQ. Thanks for the follow. Read me note. Is that a pun? Read me note. I've read my note. Anyway. there's no point in really looking at this until this afternoon. The Nasdaq moves in the New York session majority of the time. Main movement, obviously, it does move in the Globex. This is what's called the Globex session. So you can trade the futures market on the indices out of market opening times on what's called Globex. So you tend to get more algorithmic movement in Globex, which is why you see very little propulsion movement. It's all very rhythmic. Some people are really good at trading Globex. I'm not. I don't trade it. I didn't trade it. I don't trade futures anymore at the moment anyway. So, but yeah, at the moment it's a long. Although that's not a very nice propulsion move at all, really, because it's actually part of an A shape, not part of an accumulation break. So it's not a breakout move. It's just a reversal. As you can see, it's a reversal. We've had a reversal alert, so I'd be looking on that one to go long. But if you're in this, if you're looking to get into this today, intraday, you've got until 1:30 to get out, because at 1:30 this thing's going to do that or that with aplomb, and you will either get stopped out or you will hit your profit target if you're using them. I need 100-ton weight on US dollar CAD. There you go. There's your 100-ton weight. It's just triggered. That reversal alert. 100 tons. That's a lot. This is going. I'm going to, when we come back for the New York session. Well, for the non-farm payroll 120. I think I'm going to watch US dollar CAD, because this is going to be the one. This is going to be the fun this afternoon. If we get opposing results on this, this thing's going to be. This is going to be a platform lockup. The amount of data coming in here is going to be unbelievable. It probably won't even be able to keep up, but this will be a good one to watch. US dollar CAD. This thing could fly, absolutely fly. We'll watch the indices as well, because the indices will obviously do it. So yeah, nothing today on the Nasdaq. It's just the DAX. Not worth trading today. No movement. Would you still cost average into a position if it's moved an ADR plus, however, not had a reversal alert? Yes. Did you not ask that earlier? Someone asked me that question earlier. Yeah, you still got to get, you've got to get in, yeah? So there's a good example of that. Was it the euro? Well, that's a good example. That's a really good example, actually. No, it's not a great example. There was one. Euro New Zealand. So I think this was it. So we had this. You potentially would have got in on a short there, and then we had this parabolic move, which this is ADR is 138. And we got a move of 204. So that's about 170 odd ADR, something like that. Very little opportunity to get into it. You would have had a reversal out in there, actually. But that's still an ADR away. So the way I set the EA up is to get in a minimum of half an ADR. So the rule is, the spacing rule for position trading is a minimum. There is no maximum. So if you get in here with an entry, yeah, and this thing goes parabolic, yeah, you won't get a reversal alert until we calm down. That's where you get in. If the distance between your initial entry and that is 1.5 ADR, that's it. That's what it is. You don't want to get in until there is signs of the market coming back your way. The reversal alert signals a potential shift in structure. So when you get the sellers starting to come on board, that's when we want to be on board with the flow of traffic, the sellers. So when you get your reversal alert, you get in regardless, as long as it's a minimum of either half an ADR or 1 ADR, depending on your risk tolerance. So half an ADR is going to get you into more positions and get you out of them faster. However, if you get squeezed, it's going to be in more drawdown. There's pluses and minuses. There's position trading still has a lot of problems. Yeah, it has a lot less problems than getting stopped out every second of the day, which is what 99% of traders are doing is just getting in and getting stopped out and getting crossed and getting overloaded. That's why everybody blows their accounts, because they can't handle the psychology. So removing the stop removes this speed of loss and the psychological problem of being stopped out and losing all the time. However, it introduces a new problem, which is your ability to control drawdown and your understanding of what drawdown is and how to use it. So this is an important factor, the distance between your trades. The closer you get in, the more pain the drawdown will be when you get drawdown. But you will have weeks and months where it will just do that, and you'll have like no drawdown. You'll be in like maximum of 3 to 5% drawdown on your account, which is just totally normal. Then you'll get squeezed and you'll get 5-10% upwards. That's when you start to worry, but you just got to manage it. And there's no way of forcing an entry. You could, if you wanted to. Yeah, let's say, for example, you're saying, I want to get in and I'm going to take my positions half an ADR apart. You could just get in at half an ADR regardless, but that's grid trading. So what you do is you get in and you set a grid of pending orders, which is absolutely fine in itself. But the problem with grid trading is if you get in there and you get a parabolic move against you, all you've done is you've entered into 3 extra positions, which never had a hope in hell of coming back and making you a profit. So all you're doing is you're multiplying your drawdown. Wait for the market to say, right, I'm having a rest. So I'll get in when you're having a rest in the hope that you do that. Hopefully you'll do that. If you don't do that, fine. I'll wait until you do that again. And if you do that again, you're going to be absolutely exhausted and you're going to want to take profit more. Yeah. As now, you know, if you got in like, I don't know, you got in long here, for example, for some reason, you wouldn't, but if you got in long there, absolutely no hope in hell of you getting in until there, where I got out. Look. Yeah. So, you know, my entry here, so that's where I took my entry there. Reversal alert, RSI extension. I couldn't get in again. The minimum pip distance is 69 for me. So from that entry there, 69 is there, right? Half an ADR. So that is the very bare minimum. It went propulsion through, yeah. The next reversal alert was here. Because of the speed of that movement, there was no red candles in there on the lower time frames. So the next reversal alert was there. So I didn't take a second entry there because I didn't get a signal that the structure had broken, because it was parabolic A-shaped recovery. And then it came down and I got out. But I could have, when I saw that price action candlestick, that inside bar go and that bear break go, I could have taken one manually up there. But the market reversal alert indicator works on market structure. It doesn't work on price action. So at that point, I didn't get given a signal to get in on a second entry. Wherever that was. Yeah. So look, first entry, that was the last down candle before that parabolic move. Yeah. I didn't get a reversal alert until there. 69 pips away from my initial entry is up here. So that didn't trigger my entry on that reversal alert, because the candle that triggered the entry on that reversal alert was that one. I was back in profit by then. Yeah. So again, there's inherent issues with the market reverse alerts indicator in the fact that it works off of expected structure breaks, which are opposite moves, excuse me, before a low or a high is formed. If you get a parabolic move, you won't get a reversal alert. So again, this is why I say use the market reversal alerts EA and let it get you into positions, but check them. If I see a parabolic move, right? If I'd have been watching this and I'd have seen that price action pattern play out there, I would have taken a short manually, because that is to me a structure break. It's just not, it doesn't follow the rules of the indicator. Yeah, indicators and EAs, as good as they are, have rules. The rules say when that candle breaks, get in. The price action part of my head says that is the final propulsion move. Then we look at inside bars. When that inside bar suddenly breaks the propulsion move, I would enter. Yeah, that's a propulsion breakout on, and a control candle, basically, isn't it? So I could have taken one there. Should have taken one there. Didn't. Doesn't matter. Yeah. So there's always going to be ways and means to adapt manually. And this is why I keep saying all the time, the EA is there as a tool to execute the strategies. It's not a set it on the chart, walk away, sit on a beach and drink a Mai Tai. You've got to watch this thing. Fundamentals are going to shift against you. You're going to need to do aggressive drawdown control at times. You're going to see opportunities where you think, screw it, that looks good regardless of whether or not the indicator can get me in or the EA can get me in. You just have to get in. Yeah. If something pushes like that and then comes down and puts in that, right? This guy enters the building. Yeah. And you are short down here somewhere. That is a good entry. You're not going to get an alert. But you see that on a chart, you'd be like, that looks bearish. Take one. If as long as it's far enough away, take it. Before I developed the EA, I manually traded everything. And in the course, I teach slightly different to what I'm saying here, in the fact that I say, right, you get into your initial position. Okay. So this trade here, right? What you need to do now is look left. And I still do this, obviously, but you need to look left. And if there's nowhere to the left that we can see that is obvious where we're going to get a resistance bounce, you just have to go, right, well, I'll wait for the next reversal alert or strength in the opposite direction to get in, because there's no logical area to enter a trade. Go up in higher time frames and all of a sudden you'll start to see. So look left when we get into higher time frames. Where's this likely to be turning? Well, we've got a lovely area of balance up there where we traded quite happily for a long time. You know, call it a range, call it whatever you like. Somewhere in there, we're going to find resistance. I have got no way of telling where that's going to be. This is an utter mess. And at any point in here, you could pick a resistance. And, you know, people always do this, the hindsight traders. They go like that and they go, wow, look at that. To the pip from that candle. It's like, it's got nothing to do with it, mate. It just turned because the market's exhausted and their profit taken on the move. Yeah. So if I look to the left and I can't see anything, fine. I just got to get in. So I'll get in there and I'll get in half an ADR apart, 3/4 of an ADR apart, but I'll wait for signs of weakness coming. Bearish engulfings. Yeah. So we push up. We've got bearish engulfing. That's bearish. Shooting stars at the high. 3-bar reversals. That sort of stuff. Yeah. If you're not going to get a reverse alert, use price action. And again, all covered on the website in the free education bit. Well, it's all free education, but we're covered in the other indication. Price action, candlestick patterns. Where is it? Yeah, the top 8 candlestick patterns you need to know. Forget the rest. Yeah, there's only there's 1,000. You know, like I'm drawing. Look at me, I'm drawing the same stuff. I just drew. Look. But there's only a certain number of candlestick patterns you will see. Look, John Wick. Look. Yeah, he's been around for a long time. This is how he's going to feel later. Non-farm payroll. We went short. Or I need to have one of those where he's not happy, don't I? Shooting a dog or something. I don't know. Oh, poor dog. John Wick. That's so sad in John Wick. I can't watch that bit. I've got a dog. Whenever you see any dogs getting hurt in films and you've got a dog, you can't watch. So yeah, watch these. Yeah. So this is better than the market reversal alert indicator, if you can do that, but you need to do it manually. And I can create an EA that does price action, but you know, it doesn't matter what you pick. You just pick a point where you can see the market is starting to falter and you get in. And look left. Yeah, always look left. Every time you get into a position, look left. Yeah. Euro pound, got in short there, got out there. If I had got that and it had pushed up, I'd be saying, right, where are we going to turn? There. What did we do? Turned. What are we doing now? Turning. Why are we turning? Because it's a support. resistance. It's how the market works. It just moves from level to level, making money. All you need to do is get in when you think it's going to turn. But if it doesn't turn, don't use one of those stupid orders that makes you a loss. Get in again, because it's going to do that there. And if that doesn't work, it will go up further and there'll be somewhere else it will turn. Get in. At some point, it's going to come down, because if they don't, they won't make money. And that's all the market does all the time. And it's all it's done for decades. Yeah. This is a brilliant example. Look. I don't know where, somewhere up there. Yeah. If I got in there and that exit wasn't on the table and it had done that and it pushed up, and I'd got in there and it hadn't done that and it had just gone like that and pushed up, I would get in there. Yeah. At some point, you're going to get that. 1 ADR. If you can get 1 ADR, you can get out with a profit. That's all you need. What does market do 42% of the time? It moves beyond ADR. We know 42% of the days in the year, there is a chance of us moving outside of our average daily range. If we can build a position short and keep our average price within an average daily range, we know there's a 42% chance that it's going to come down at some point and grab that. That's why we use ADR. That's why we use our average price and keep it within ADR when we're scaling into positions. We're just playing the market. The market is doing exactly the same thing over and over again. We're just extracting money from it when it lets us, but we can't time the market, so we just get in. How you get in is up to you. And obviously that's why I built the EA, because you don't have to think about it. You put it on there, it does it for you. But you still got to watch it, because you're going to get parabolic moves and you need to be aware of what to do. Pound yen prof stat. I'm sorry, I asked that ages ago, didn't you? Pound yen. I have looked at pound yen. It's going up. Everything's going up pound at the moment. Yen, we had negative news on yesterday as well. So this is the perfect storm. Hence why we have a 150 ADR. So from a fundamental perspective, it's range bound. Sentiment is saying to go long. COT is long. You should be longing. Down here was where you should have got in. In fact, on the hourly is the better entry, look. But you'd have been out. Unless you're brave. This is a good example. Remember what we were talking about earlier, whoever it was that said about the break-even stops. Yeah? Should I use break-even? What's my view on break-even stops? Look at this reversal alert. Beautiful. Right? You get into a trade. This arrow here, the retest arrow, is there for a reason. Yeah? Because we know when we break structure, we retest it. If you take a trade long and it moves up and you break even your trade, you are asking, you know for a fact it's going to do it, right? It got the W pattern, didn't break that high, came back down again. Yeah. So if you break even your stop when you get in, you will always get tested. Not always, but most of the time you will get tested. And then it goes. This is why I say in the bootcamp, yeah, one of the slides in the bootcamp is talking about why we get frustrated as traders and why we lose money. Even when you get a good trade, right? If I'd have got in here, or for example, on an M5 reversal alert and it had gone up to there and I got out, I would be unhappy. Why would I be unhappy and cross? Because it did that. I think the market owes me something because it did that. No, you got into a trade, you got out of your trade. You did absolutely what you should have done. If you get into a trade and then you put a break-even stop and it stops you out and then goes long, you've done exactly what you should have done. You haven't lost money, but what are you cross? Every time you use an order in the market that takes you out, you are cross. If you got in here with a perfect trade and you had a TP there, yeah, and it goes like that, like that, like that, like that, like that, hits your TP, should you be happy? Yes. What will you be? Cross. Why? Because this thing went another ADR in your direction. You missed all of that. The market owes you all that money. That's what you're thinking, aren't you? When you position trade, this all disappears. You just make money. Isn't it? I think I've not been looking closely enough at this sentiment. Retail max score is 2 or -2 and can be cancelled out by other scores. I hadn't realised that this may mean 95% retail participants. Yeah, the best one to look at. There's 2 pages for retail sentiment. You've got the main retail sentiment page. So I must move this one to combined because I've already got it open. The main retail sentiment page just gives you retail sentiment. And obviously the buy. This is the thing, guys, look. There's so much of it, so much money extended. And this is why we're getting violent moves at the moment, because the retail crowd are... Look at that. 96% of the market is long US dollar CAD at the moment. It is flying. Yeah, that's what I mean. You can't just go, oh, I'm going to go short because of that. They will be right. Retail are right. Yeah, we get it right a lot of the time as well. But looking at the combined sentiment mixes the COT bias along with it. So both sentiment is a 6, and a 6 is your best trades, which means that the institutional buying at the moment is on these pairs, and retail are going the opposite direction, which means we should be looking for longs. So we want to be in line with these guys because these guys know what they're doing. These guys do a way better scorecard than I do, and these guys make shed loads of cash because they're in banks and institutions. We follow those guys. They know what they're doing. These guys make the trends happen. If retail are the opposite side, that gives us twice as much reason to go that way, doesn't it? So these are your top ones. But that combined sentiment gives you both. So the combined sentiment page really is the best one to look at, really, I think. But you've got the retail only, so either or. Got a promo code for 15% as well, Bartek. Yeah, if you get a promo code for any of the prop firms, that's obviously better. You can think of the retail sentiment number as the elastic band. The higher the number, the further the price will move. I don't know if that's true. That's what we're testing, isn't it? This is what the EA is testing. I'm testing, you know, all this EA is doing at the moment is going, you're long, okay, I'll short it. And look at it. It's just so obvious when you know what happens with retail. But we'll test it. We'll test how stretched that elastic band can get. That's the important thing. We need to know what the maxes are. During a possible big move incoming, what do you think of buying and selling at the same time? Wait till results are out, then just close the position that's not with the trend and profit. If you buy and sell at the same level, hedge, you're never going to make money, are you? Because if you were here right now and you took a long and a short, your P&L is locked in at 0 minus commission and spread. So when this goes down, the amount of money you make on this will be exactly the same as the money you make on your buy. So you can't make money that way. If you are talking about taking a spread, what we call a straddle trade on US dollar CAD, for example, ahead of the news. So you'd be looking down here, news is about to come out. So we could take a straddle trade there and there. You go long or you go short or both. And if you get a whipsaw, obviously that's what will happen. All you're going to do is you're going to lock in that loss. I don't really know what you mean, how you would do that. News trading is very dangerous. It can be massively profitable. But the best way to make money out of news is to get in before the news and get a position established and then get yourself break even. Because when news comes out, it does one of two things. It whipsaws, and at that point, you're not going to make any money. Or it goes parabolic in one direction. That's when you make a fortune. The odds are that, you know, it's just, I don't know. But the problem with news trading is as well, you'll get a huge spread. And that spread, when that news happens, that spread can widen very, very, very dramatically. And the other problem is obviously whipsawing and slippage. So if you get in here, let's say you get in there long and you put your stop loss there. If this goes like that, bang, and they take that liquidity out, and then they come back fast and this is all going to happen within one candle. This is going to happen within 2 to 3 seconds, and they slam hard, you may say, I want to get out there, but that stop loss can trigger down here, right? So if that is, let's say, 1% of your account, you could get stopped out at 2% of your account. Yeah, slippage. It's been there forever, and it will be there forever, and there is nothing you can do about it. There's no point phoning your broker up and going, I got slipped. Yep, you did. Read your contract. You've signed a contract with your broker that says that he can execute your order at any level he likes. Any level. i.e., if you get into a trade and you put a stop loss there, when you get into your trade, he has legal rights to spread and take you out on the next candle and then do whatever the hell he likes. It's in your contract. Go and read it. Every broker contract says that they have the right to fill you at the next available level they can provide liquidity for. They can provide liquidity for. What they get filled at and what you get filled at is entirely up to your broker, which is why overnight spreads you can see up to 30 pips on New Zealand pairs, half an ADR. I've been stopped out on them. I've shown them in here over and over again. Yeah, drawdown control. I've had drawdown control enacted on my account. Look at this here. Yeah, that's where the market closed. That's where the market opened. If you had a stop loss down here, I'm pretty sure it would have got triggered, because the stop on this thing would be somewhere in the region of 35 pips. Could be 18, definitely 20 pips. Yeah. Brokers are not your friends. If you use a stop loss, you'll get stopped out. If you're doing trading at news, they will spread that to death. It's dangerous, just dangerous. Thanks for the follow, Helmy. I'm surprised my friend hasn't subscribed. My friend that I banned. Naughty, aren't I? Oh, isn't he naughty? Sounds like a what's those programs called? Naughty but Nice. I can't remember. If you're not English, you won't know, so I won't talk about it. One hell of a session. Yeah, I like hell of a sessions. Which is the best funding firm for FX? My Forex funds. Costa, you should know that. You've been in here long enough. Best all-rounder at My Forex funds. If you want to get funded fast and over leverage a little bit more than normal, E8, because there's no time limits and they are virtually as cheap, nearly as cheap as My Forex funds. Those are the two really that you need to focus on. Those wicks really are begging to be printed on t-shirts. I know. I don't know if I've got rights to them. I'm not going to start merchandise. I'm not merchandising. It's really easy to start merchandising. They even promote it in YouTube. There's a thing you can do to set your channel up for merchandising. Set your shop up. I'm not really into that. Those wicks really. I don't record that. About that one. Morning Satan's flip flop. That's a brilliant name. I love that name. Satan's flip flop. There's all sorts of things going through my head now. Last question. Can you look at Euro odd? I'm short with 3% drawdown and about to take some off. Euro odd. Okay, so yeah, we're up in the gods at the minute. So the other levels I've got marked obviously are back here. So where we are at the moment, look, on the daily, we are above 75 on the daily. It's not a regular occurrence. Here we had a point where we got extended. Let's just draw that on. So again, always when you're thinking about doing anything, look at the past for clues. It's obviously not guaranteed. Nothing's guaranteed to work, but that was 70. That's when we hit 75 that day. The day after that day, yeah. So run up, parabolic. These are both ADR plus days. Parabolic, bit of a move. So you can see we're slowing down. There's a big wick here at the moment on the Euro odd. That was the next day. huge pullback. Then we pushed up again, had another big pullback, and then we went parabolic again for a few days. So you're going to get some kind of profit take on this before they start a new move, if they're able to. You're likely to get that move, that parabolic move, either on Monday or today based on the news. So right now, this is probably the most bearish price action we've had for a while, yeah. You look at the price action now. We've had a reversal alert on the hourly. We've come back, parabolic push into it, and now we're sitting on an inside bar, yeah, on the London session. So this is a bearish move during Asia. We made a new low and took out the Asian low. Yeah, we've got these targets down here, don't forget. Well, that one really, definitely, that's a given. And we're an inside bar. So what I would say, if you want to scale out of this, either use that high or that high to start taking some pressure off. But don't take too much off. Bring yourself down. So maybe drop 0.5% to 1%, 1.5% off the position. I don't know what your drawdown is. So for me, if I was in like 3.5%, 4% drawdown on an individual trade, I would probably look to take 1%, 1.5% off, bring it back down to 2.5. And that's going to slow the rate of drawdown for you dramatically. So you won't be as worried about it. But if you're only in sort of 2, maybe 3% of drawdown, maybe up here, when you get up to there, set an alert and then take 50% off of one of them or wherever you are in. Yeah. And up there, if it gets there, take another 50% off of another one, maybe. But right now, this is massively bearish. If we break that low of the London session today, that is confirmed M pattern reversal. Yeah, we're running straight into potential support in the form of previous resistance and a propulsion move. However, we've got that massive target to the downside. So the only thing really that we can use here is euro weakness, because the Aussie dollar is weak. So look at the news and what we've got coming up and where the market might try to drive it next week. We've got pound claimant count. We got them. That's not really relevant. We got CPIs for the US, pound, US, New Zealand GDP figures. So Wednesday possibly may affect the Aussie. Unemployment rates is on Thursday next week. So you're not going to get any real strength forecast in the market or news events that are going to help you until next Thursday. So you're sitting in it, really. There's nothing for the euro. There's nothing for the Oz. So there's a good chance we might just go into that sort of movement and just gradually grind our way. We could go parabolic, though. The US and the CAD are the, well, the US really is the big mover. That's the one that makes makes things happen. So if you look at the where are we? The 15th of December. Should have marked it on the chart, shouldn't I? Yeah. Yeah. Look at the 15th of December, where the news came out. Here. Yeah, this is the Euro CAD, and this is the US dollar unemployment figures. Yeah. Yeah. See, the US market affects everything. Yeah. This is the euro pound. Nothing to do with unemployment at all in the US. And yet we had a parabolic ADR move. Yeah. So today, on all of your trades, regardless of what currencies you're in, you are going to get money moved out of them or into them from or to the US dollar and potentially the Canadian dollar. So everything's going to move. So when you're in squeezes which have gone too far or gone a long way, it doesn't matter what you're in. There's every chance that they will use that to do their profit take move. Don't forget, their next move to make money is that. If they don't do that, they can't bank. Doesn't mean they have to bank. They may not want to bank. I'm looking at Euro CAD. I should be looking at Euro odd. Same thing. Yeah. Their next move is that. So they will news events will be used to drive the profit take moves, and that's just the ebb and flow. But if you're uncomfortable, take it off. Not all of it, some of it. Take a loss. Or even better still, Michael, if you've got the market reversal alerts EA, set the EA up to do this for you. Just say, when you get 1 ADR against me, just take a third of it off. Just loosen the blow. Or when we get 2 ADR, 1.5 ADR away, take half of it off. And let the EA scale out on the way up here. And that'll obviously keep your average way closer as well. You'll take more losses in your P&L, but you'll be more comfortable. Again, I cover all of that in the boot camp. Your level of comfort and my level of comfort and someone else's level of comfort are all going to be different. No one's going to be having the same risk tolerance. So you can't answer the question of, there's no mechanical, when do I do drawdown control? When do I do aggressive drawdown control? When should I scale out of a position? When you're uncomfortable. If you've got 15% banked, like, you know, look at the sentiment EA sitting on 11% profit. If this was sitting in 5% profit, 5% drawdown, am I uncomfortable? Of course I'm not, because I've banked 12% or 11.5%. If this was sitting in 6.5% profit, I'd be thinking, right, let's take a little bit off of that, little bit off of that, little bit off of that. Let's just loosen the pressure. This one, obviously, that's the one I would concentrate on. Euro pound, I'd be like, right, okay, take 50% off of that and 50% off of that. Let's make sure that if this does go further, we're not going to get in any more pain. And I'll use that to get rid of that. But you see what I mean? This is what I use this example, this type of example in the bootcamp. What you have here will be instrumental in your decision making as to what you do with that. When this is sitting at $750, whether or not you close that position out and bank that profit will be instrumentally decided by that. This is what now your shift in psychology as a position trader moves from being, I'm cross all the time because I'm stopped out, or I'm cross all the time because I got my take profit and now it's gone parabolic and I've missed all of that. That your psychology of being cross stops being that, and it becomes using this. This is what's alien, is the fact that you sit in green all the time with profit, which you're not used to. You're flipping the coin to the opposite of managing this instead of focusing on trying to build that. That will just build itself automatically because it will just happen. Because you're not using a stop, everything becomes profitable and everything gets banked. When it doesn't get banked, your focus is here. But your focus here is 100% driven by that and what you've made. I've got the mortgage paid for the next 10 months. Dear? Okay, brilliant. What have we got here? Loss. Well, should we go on holiday? Yeah, no problem. Shut it. I've only got 9.5% profit now this month, love. No problem. Totally different mindset. And when you're doing drawdown control on your in squeezed positions, it's your P&L that will make the decisions for you, because that is what will drive your comfort level. And you always got to look at your P&L. There's so much you've got to look at. Look at your P&L. Look at the drawdown. Look at potentially levels. Look at the news. There's all sorts of stuff that's going to affect this. How parabolic are we? When did they last do a profit take? They didn't. They just flagged and pushed. Okay, so these guys here haven't actually got out yet. We're pushed up here. These guys are absolutely loaded. When that comes down, it's going to come down like that. Where's it going to go? There. Why? Because that's what it does. That's what it's always doing. We pushed up to there. We pulled back. We pushed up to there. We pulled back. We pushed out of it. Where did it come back to? There. Why don't you use break-even stops? Because it's going to come back to there. We know it does. Why? Because we've seen it. People just don't pay attention to this. There's a big slide in the bootcamp, isn't there, with massive eyeballs on it that says look left. Look left. And I've got lots of signposts with look left. Yeah. This tells you everything you need to know about how to extract money from the market, and it tells you where the market's going to turn. That is the most important thing to do, but that is not guaranteed to work. And at the moment, obviously, with this particular trade, you really don't have a left until 150 ADR-ish. again, it's a zone. It's something like that. Somewhere around there, between 200 and 125 ADR, you will find this will come down. I can't tell you where. No one can. But if it gets there, if it doesn't do that, and it does that, it will do that. Those are the two scenarios you've got to plan for. And if it does that and you're going to be uncomfortable, scale out. Make yourself more comfortable on the ride. It's going to be an uncomfortable ride if it goes up there. There's nothing you can do, but you can make yourself a little bit more comfortable, can't you? That's all you can do. Manage it. Why do you think they call them portfolio managers in banks? Yeah, they're not traders. They're managing a portfolio. Is it going up? Yeah. Okay, what should we do with it? Their decisions are not made by the profit. Forget this. Everything that's working, forget it. I'm not interested in any of this. This is just, I almost want a trade manager dashboard that doesn't show anything in profit because it's totally irrelevant to my decision-making processes. This is going to become part of this green bit today. This isn't. What shall I do with that? How am I going to use this to manage this? Where is it going? This is my analysis. My analysis is always on my trade manager dashboard. I open it up and I go, where am I? Every 3 or 4 hours, I look at it and go, right, what have I got to deal with? Oh, crap, that's gone wrong. Right, okay, I need to deal with that. Where has it gone? It's just about to hit resistance. I'll wait and see what happens when we get there. Pop. I didn't need to worry about it. What's next? That's my thought making. My decision making process is that. The EA gets me in. All the EA is doing is monitoring these dashboards and getting me in, isn't it? I'm focused on what's wrong, what's going wrong, because what's going right is irrelevant. It's just going in the bank. Customer support, perfect example, yeah? Every company in the world has a customer support desk, yeah? Do they ever deal with happy customers? Nope. Why? Because happy customers just get on with it. I'm on Virgin Media. I've been on Virgin Media for 4 years. I've never phoned Virgin Media. Why? Because I've never had a problem. I am Virgin Media's green. When Virgin Media goes down, I become red. I phone customer support. Your job is customer support. That's probably the best analogy I've ever come up with. And it explains it really, really well. Never going to talk to these people because they're just happily ticking along making money. These people are cross. We need to deal with them. Yeah, that's position trading. In a nutshell. Christ, why did I spend 10 hours doing the course? Why didn't I just say that? Everybody gets that. That was a light bulb moment, wasn't it? Pound US dollar loses momentum. Yeah. Oh no. That guy in here is going to be very cross, isn't he? Henry. He's going to be cross because he's long. You got it wrong, Henry. I have done it. Yes, so the answer is yes, you can. You can position trade. But what you can't control is drawdown. So, and I've said this before, with any EA or strategy you use in prop, whether or not you pass will be dependent on the market that week. So if I start on a Monday and I take lots of long trades because my strategy tells me to, and all the instruments I've got into go up, I will pass my evaluation. If I have the opposite and all the instruments go down because the strategy is having a 50% strike rate, and at the moment I'm experiencing the negative part of that, I will fail. My system, strategy, or style of trading has nothing to do with my pass or fail. The market movement, the time that I do the trades is what makes you pass or fail. So if you take an evaluation on prop using the market reverse alerts EA or the opening range breakout EA or any EA, and we have a week where everything just goes like that, yeah, you will pass. If you have a week where it all goes like that, you will fail. Yeah. And this is, again, why I keep saying with prop, your job with prop is not to get a prop account, get it funded and keep it and grow it. Your job with a prop account is to pass it, build it up to an amount of money that you're happy to make and draw it out and then try again. Because at some point you're going to hit that losing run and it's going to get that 5% or 12% level and you can't do anything about it at all. This was in 5.5% drawdown yesterday. It banked 3.81%. It's banked 1.5% today, 1.05. So in the last 2 days, it's banked 4.89%. No, it hasn't. 4.86%. Yeah, and it's sitting in 1.2% of drawdown. Do you think a prop firm would be happy with that result? Yes. Why aren't they letting me do it? Because they said I couldn't go to 5% of drawdown. So they didn't fund me, the profitable trader. That's not their job. Their goal is to get evaluations and get money in the bank by giving people the chance to pay for a demo account. That's the prop firm's business model. Your business model is to fight their business model by passing evaluation stage 1, passing evaluation stage 2, getting a funded account, having a lucky run, and stopping trading until that 5K or whatever is available to withdrawal, pressing the withdrawal button, and then starting there again and hoping that you get that. If you get that, you go back to there. If you get that, you stop, wait, withdrawal. The longest I've held a prop is 2.5. And to be honest, I didn't trade it much. Why? Because I had lucky streaks and I stopped. This is why they have the rule, the 21-day rule. Again, all these prop firms have got either a 7 or a 21 rule. It'll be in, I don't know if I'll be able to find it, but it'll be in there somewhere. There's a rule that says you have to trade a certain amount of days, and that certain amount of days will be within the withdrawal process. So if their withdrawal process is you can draw out every 21 days, there'll be a 20-day trading rule. So if you don't take a trade, they'll cancel your account. So you have to take a trade. So they force you to take a trade, and that trade fails, and that annoys you. Then you take another one, you blow the account. Yeah, it's all not fixed, but it's all manufactured in a way that it teaches you really good risk management. And that's where everyone realizes, oh shit, it's really hard. So yeah, you can do it. Definitely you can do it. I might do it again. What I'll do is I'll set up another prop, and for Monday, I'll set up another evaluation, and I'll just literally stick the H4M5 on there, or ADR. Yeah, I might stick H4M5 on there, and just use 80-20, and we'll just let it run, and we'll see how long it takes. But it won't pass fast. It will take ages because it's only designed to, it's only manufactured to make sort of 10% a month, isn't it? So it could be anything from 3 to 4 weeks before we pass. It's a long time, isn't it, for prop? And that's only stage 1. So the market reversal like EA definitely will pass for you, no problem at all. But it won't pass stage 1 and 2 for probably somewhere in the region of 4 to 8 weeks. So you'll get funded in 2 months. But it will work, definitely. But it's, again, 100% dependent on the instruments it trades and what happens to those instruments afterwards, isn't it? Look at CAD Swiss. Sorry, CAD, CAD Swiss. You know, H1 RSI extension. Yeah. Boom. This is why the market, this is why an evaluation will fail. Not because of the system and the strategy. We know that it works. It's just you might get one where it just goes too far. Nothing you can do. Yeah. The market decides when you make money. This is why they call it a squeeze. This is a short squeeze or a long squeeze. You know, they call it a squeeze because this is the market participants getting rid of everybody. Yeah, CAD Swiss. Yeah, 98% of the market is longing this. What is the market doing? It's squeezing these long positions, squeezing all the long positions. I'm long, squeeze, I'm long, squeeze, I'm long, squeeze, I'm long, squeeze, okay, fine, I'm short, okay, profit take. That's what the banks do. They squeeze the money out of the retail. That's retail at the moment. 98% of them are long. What are they in? Oh, pain. But pain doesn't last forever because profit takes have to happen. They have to come back to here. They will do this today or tomorrow or next week, but we know they will. Why? Because that's what they've done for decades. And as long as that happens, we will make money as position traders, won't we? But the pain has got to be controlled. That's your job. Aussie dollar, US dollar, Ratib. I've covered that one again already, but I've got to go soon, guys, because it's 11 o'clock and I'm back on at 1:20. Aussie US at the moment is extended to the downside on the 4 hour. So you've got a long back up into there. 150 ADR to the upside from where we are now. In fact, yeah, I mean, if you look at this on the hourly, that is your target. 66,740 would be the upside target I would say they will probably go for, which is this propulsion gap here. 66,965 actually. Or you know, support turns into resistance. We haven't tested it yet, so we'll come back up to there somewhere. Again, 100% reliant on US dollar this afternoon. It could absolutely collapse this afternoon if the US dollar powers up. I don't know. Can you might consider reducing the historical retail sentiment to 30 days in order to go faster? What I'm considering with it is actually the historical retail sentiment is actually only getting this every 4 hours. What I've done is I've removed this, so this page loads immediately now. 957 was the last one, yeah. So what I've done is I've split it down now. So you just go and look at the pairs that you're interested in. It does take a while to load, but it's not that long. 5 seconds. So it's not the end of the world, is it? But what I'm trying to do, and this is why it says on this page, experimental, yeah. And I say on here, I'm going to probably split it down into 4, 2, or 12 hours. What I'm looking for is I'm looking to build a long-term picture that I can go and back test. This is what it's there for, yeah, to go and back test this. But this is what I was doing before I decided to build the EA, and now basically I'm just forward testing the strategy anyway. So, you know, I don't even know if I need it, but I'm thinking about what to do with it. I hate stop losses. So do I. What would you say is the most efficient EA to use to pass the funded account challenge? I don't know. Of mine, the market reversal alerts indicator, or the ORB, both of them. But as I said, it doesn't. There's nothing that's efficient. The market is what makes the money. The market decides when you get paid, not an EA. I can't look at any more pairs, guys. I've looked at everything already. I've got to go in a bit. You nasty banker. Bankers are good. Bankers move the money. If the bankers don't move the money, we can't make the money. You know, this is why I laugh at everyone who says, oh, I'm not going to trade about the news. Why not? That's when the market moves. When you make your money. Look at this. That and that. The reason that is because there's the news event that made it. Nothing else. That was news. Don't trade news, you're mental. What do you need to make money? Market movement. What does the news do? Move the market. I'm not going to trade the news. What? Come on. Is the payout on my Forex funds monthly or weekly? It's bi-weekly. Your first one is 7 days. Then it's bi-weekly. So I had a burning question I was thinking about as I'm working. With the FTMO aggressive account, you get 10% max drawdown with 5% max per day. I don't know. I don't trade FTMO. That seems fairly reasonable to trade using position trading. If you've got small lots. But yeah, but that's the same as my Forex funds. Yeah, same as my Forex funds. Overall drawdown is 12%. Daily starting drawdown is 5%. So why not use my Forex funds? Up to you. Use whoever you want. They're all virtually the same. I just push these. I don't push anybody, but I mean, I just use these guys because. Chris, thanks for the follow. Helmy, I think I've already said you. Early morning, I checked the retail sentiment webpage and noticed there were lots of exotic pairs included. and buy and sell colored boxes were out of sync. Yeah, you might. Basically, what this does is it goes and grabs lots of data for lots of pairs, and then I have a script that runs that cleans it up and filters it all out. So it gets rid of all of the exotics. But I get data on everything. I just don't show it. So I clean these, but every now and again, the problem with scripts is this is all run by Google Scripts. And the problem with Google Scripts is you can't time them properly. You can only time the scripts to run on set minute intervals or at set times of day. And when you say you want to run it at set time of day, what it does is it takes the time of day that you actually started that script. So what I do is I build a script and it's finished and it runs at 1:05, for example, like this one. This is why the data on this, you will always find this has got a 57, yeah? 8:57 a.m. So I've got a script that runs at 8:57 a.m. It goes and gets data. I've got a script then that I ran to clean the data. The trouble is I press the button to run it every hour at 9:15. So Google Script now sits there with the crap data and waits to there. I said, well, why not run it at 8:57? No, can't. I only go on either 15-minute intervals or hourly intervals. And I said, why don't you just run everything at the high of the day? No, don't do that. So Google Scripts is great, but it's got downfalls. So what you'll find is sometimes this script's run, gets all the data, and it's the script that is designed to clean the data hasn't run yet. I tried incorporating that into this script, and then it all went, I'm sorry, I've timed out. And then you have to go to pay. And this is all free. I don't have a revenue stream or an income from this. And I'm happy to make this be an A+ product, but I'm going to need to charge for it. And I don't want to. I'd rather have all this data free. So yes, you will have bits and pieces where it just goes a bit crazy, but it will all get cleaned up. Sometimes you get duplicates in the historical as well. So in here, occasionally you'll get 2 of the same, but again, there's a script that deletes duplicates. That happens. And again, it's all like everything. At the end of the day, Google Scripts is just a computer running scripts. If that script crashes or something, it will only run half the script. And we're dealing with a lot of data here, guys. The spreadsheet is big. 28 FX pairs over 3 months is a big sheet of data. And this is all run on spreadsheets at the moment. It's not run on databases. Again, I can do all of that work, but I don't have the time and I'm not paying someone to provide a free service. So if someone wants to give me a couple of grand, I'll make this load like that. But I haven't got the time to do it myself. But what I'm going to do is I'm going to move this down to 4 hourlies. I'm going to start with 2 hourlies. So I'm going to filter out half of this data so that, I could do it on time, I suppose, and just have the latest, but I'd rather have a bigger picture with less intervals. Yeah, because if you look at it like the pound yen, on that drop there on the pound yen, for example, we've got every single hour there. And you can see the bit in the middle here. There's probably 1, 2, 3, 4, 5, 6, 7, 8, maybe 8 or 9 reporting points of data. I only need 1 or 2 there, don't I? Yeah, so that drop would be more like bop, 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 bop. So that is what that would actually look like, rather than what it looks like now, which is dot, 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 dot. Yeah, we can still see the same thing. It was gradually dropping down. What happened at that time period on the 10th of February at 2:57 a.m. to the 14th of February at 10:57 a.m.? Did the market go up? If yes, brilliant. We only need it reported every 4 hours, for example. So I'm going to do that. But what I need to do is set another sheet up, filter the data out, redo all the scripts, set a new website page up on here with new charts, new data formats, and replot it. And then I will see whether or not it looks good and it's usable. And if it is, then I will do that, and that will load a lot faster. But as I say, this is just an experimental part of the site at the moment, this historical. because it's very data heavy, and it's not fast to load. So it's work in progress. Work in progress. But by God, it looks powerful at the moment, doesn't it? I'm not trading this afternoon. Made my money. Cool. Good job. My perspective is so refreshing in the murky retail trading world. Yes. I've been through the retail trading world and the murkiness of it, and that's why I'm doing what I'm doing, because I got fed up. Fed up with idiots. My wife tells me off all the time. You shouldn't be so hard on people. Like, they're idiots. Yes, I know they're idiots, but you shouldn't be so hard on them. It's like, why do I have to tolerate idiots? Your reversal indicator repaints. Yes, it's by design. Well, that's stupid. Do you know what it does? No. Oh, just want to punch you in the face. I don't. I'm not that sort of person. But mentally, my brain is going, punch him. I was like, I can't. He's on MQL5. Are exotics tradable as a pair? I don't like them. I don't like them at all. Or do they just all represent US dollar crosses? A lot of exotics. Higher Ed 209. Yeah, calm down. I'm calm. That was just me. That was me acting angry. I'm not angry. That was my angry acting. Are exotics tradable as a pair? Most of them are US dollar crosses, obviously. So if you look at the exotics, oh blimey, what's that doing all the way over there? All these exotics, like the Polish, what's it called? Oh, it's on the screen. Look. Zloty. I can never remember that one. The yuan, the peso, and the rand. The US dollar ZAR is the one that a lot of South Africans obviously focus on because it's their currency. But a lot of these will move obviously with the US dollar, but a lot of them are pegged as well. They are pegged to other currencies. So you don't trade pegged pairs because there's no point, because there's another currency that is across that does exactly the same thing. So there's no point in trading them. The spreads are too wide. The commissions are usually higher. You've got 28 FX pairs that move very well every day. There's just no need to get involved in exotics. People like them because you can make lots of money out of them very fast, but you can always lose lots of money very fast as well. They don't focus on the negative. They focus on the positive. I can make lots of money. Well, they should be focusing on us. That's really risky. But shifting the focus is the hard bit. So yeah. Anyway, I'm going because it's 11:30. I've been on since 8, and I'm back at 1:20. So I'm going to go and have some lunch. Not going to get anything done, but I'll be back at 1:20, and we will trade the new. Well, I won't trade the news. I'm going to watch the news. So yeah, 1:20 this afternoon for the live room. And we'll watch the carnage unfold, or we'll watch the absolute nothingness happen. You know, that is the other option, but it is non-farm payroll, so we'll see how we get on. All right, so anything you need, I'll be in the Telegram group. Other than that, I'll be back in here at 1:20, and we'll obviously watch what happens with the news and see how we are going. And obviously, it'd be interesting to see how the Sentiment EA handles this, whether it just banks a ton of cash or whether it goes into hideous freefall. But we'll find out. All right, have a good one. Anybody needs it in the Telegram group. Otherwise, hopefully see you later. If not, back on Monday at 7:50.